will have the room. And he is excited because he's going to talk about the perfect entries, and he's going to talk about management, using your charts to get the most out of the trades from your perfect entries. It is probably going to be 32 flavors of awesome. You're not going to want to miss it. This is my final broadcast from Spokane, Washington. Haha, next time we talk after today, I will be back in Texas. Guys, news, they opened the government up last night. Good job. So a lot of the tentative news has just gone away, weird enough. Oops, I do need to fix my filter. My time zone, I like it to be Eastern so that we are consistent. There we go. At noon, guys, when the room ends, we have crude oil inventories. Normally that's a Wednesday escapade, but because of the holiday, it is not. It's going to be today at noon. So if you're one of my crude oil traders, the great thing is there's pretty much nothing that goes on at noon in crude oil. It's pretty dead after 11 a.m. Eastern, so probably won't affect you, but knowing that it's there is always a good thing. And then, guys, we're going to do it. We're going to talk about entries. Sounds weird, right? We're going to talk about entries. We're going to talk about TradingView. We're going to talk about NinjaTrader. They're apples and oranges, my friends. They are so different, but so similar. So if you are on TradingView, make sure that you pay attention to the TradingView lessons. Hey, what's up, Izzy Got Game? Good to see you in here. If you are on NinjaTrader, the first half of the class belongs to you, guys. And what we're going to do is we're going to learn to read indicators today. And I named the classroom Embrace the Language. Guys, one of the things that you're going to notice, and this may not work for everybody. Some of you maybe aren't as right-brained as I am. But everything that I teach, every look that I describe, every rule that's given to you is a phrase that associates with a look. So as you learn the looks, learn the language that goes with it, guys. Because what we're going to do is we're going to learn to read indicators. You will be able to look at your chart and say out loud, my rules are met. It only took 2 charts to do it. I'm staring at advantages, and that's what we're going to do this morning. We're going to talk about recognizing advantages, and the advantages become your trade. Chart reading, just looking at the chart, waiting for an edge, guys. That's about 90% of your day. There is a lot of doing nothing in day trading, but what you will find, and what I've found from experience, is that the more I wait, the better I get at waiting, the more successful I tend to be. It's pretty amazing, and a lot of you have shared that with me overtly in the room and also privately. The fewer trades, the more patient, the more focused on the advantages you become, the more likely you are to find success. 10% of your day will probably be actively trading. So if you are in front of your computer for 6 hours, hopefully not 6 hours straight, you're probably going to be in the market 36 minutes. But you're going to understand with some really simple study and some really cool verbiage, guys, you're going to understand where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. These concepts, likely to continue, will become an entry. You will be able to look at a chart. You'll be able to recognize the trend. You'll be able to establish 2 very specific advantages, and then you will get into the market where that market is most likely to continue with the trend and with those advantages. When the rules are met, you're also going to be able to say, I know precisely where the market is likely to go. And that's going to help you with targets. That's going to help you with taking profits. And then finally, you're going to be able to say, hey, this is where the market is likely to stop. This is a termination condition. No more trades into this area because my advantage is gone. And Andy, we didn't even rehearse this, guys, but I want you to see this. Andy wrote on a chart, odds favorable momentum, that's what OFM means, clear path. These are the first 2 advantages that set you up for success. And then with these advantages, Andy pinpointed precisely where the market was likely to bounce and continue with those advantages. He knew precisely where the market was likely to go and took profits right at that key Fibonacci area. And he said, you know what? We'll see if one runs. And it didn't. And that's okay. And guys, everything that he just did, and Andy, this is fantastic, is perfect to the letter. And it's just a pattern. And it can be described by words. And Andy, gold star for you. So what we're going to do is we're going to make sure that everybody in this room can see what Andy saw, do what Andy did, and repeat those things that bring success more often than they don't. When you look at your charts and you recognize advantages and you speak in advantages, and I say this every day, and I'm going to say it again because I had an awesome conversation. Guys, say it out loud. You believe what you say to yourself, whether it's good or bad. So if you say out loud, staring at your chart, scaring your pets, I have momentum. My path is clear. I can define an entry. Guys, you're in a high probability trade. This is the trade we're going to talk about this morning. This is a trade with these three rules that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. And most importantly, this is a trade that teaches you to read your indicators to recognize the advantages that will be the core of everything you do with the software. High probability. Each indicator on every chart agrees with the rules for the trade. This is not your only trade. This is your foundation. This is teaching you to read them. And then once you know these three advantages, and guys, I'm talking like maybe a week of study, tops, you'll be able to say one of my advantages is gone, the other two are present. This is a medium probability scenario. And you'll even be able to say, holy smokes, two of my advantages are gone. I'm only working with 33% of the good stuff. This is low probability. Maybe I don't want to be a part of that one. And you guys are in control of one thing when it comes to day trading. One thing, that's it. You're in control of whether or not your rules are met. So you control the entry. And you can say something clever like, if my rules are met, I'm going to take that entry because it provides an advantage, an edge. I know that it wins more than it loses. Or you may say, I don't like what's going on. I choose not to enter. That's going to be your right. But when you know what's working for you, when you know what's working against you, guys, it's going to help you make decisions on whether or not you want to enter that market. It's going to help you make decisions on how aggressively you may need to manage it. So we're really going to lean heavy on learning rules. We're going to learn them for NinjaTrader. We're going to learn them for TradingView. We're going to break them down individually, exactly what they look like. I'm going to hand you a plan so that you can simulate and practice those rules so that you can make a million mistakes as a brand new user. But if you want to get to where you want to be the fastest, guys, post your trades in the room. Show me what you're doing. Tell me what you're doing. Talk about what you see. And I'm going to bring this picture up because this is the most common phenomenon among fledgling traders, guys. Making mistakes is better than faking perfections. If you don't show me all of your trades, if you only show me your good trades, you're missing out on the lessons that are going to help you correct the things that you're doing, I'll just say, poorly. So post in the room. Tell me what you see, guys. Open yourself up to those private sessions. I don't judge because I've made every mistake you've ever made. If you get in the habit from day one, I will post everything. What happens is you get to where you want to be faster. Faking mistakes is better than making perfection. Oh, did you fake mistakes? Guys, we're going to keep it simple too. Remember, it's three rules, two charts. I'm also going to hand you plans. So the plans are labeled the KISS plans, the Keep It Simple Sunshine plan, because I'm not allowed to call you guys that name. Guys, this plan, whether it is for TradingView or whether it is for NinjaTrader, it's a stepping stone. It's the beginning. It's the very first steps, and it's designed to teach you how to read your indicators. These trades are designed to optimize your chances of success, guys, and then through study, simulation, class feedback, and practice, you're going to write your own plan. Man, I'm in a great mood, Victor. I'm in a great mood. We will share this good mood together. Guys, everything on this plan revolves around giving you the highest chance of success. Both plans come with checklists for entry, a way to make sure you are leaning on the advantages, and every step of the checklist describes what's happening on the chart. So it's important to put the looks together with the language. Um, Post in the room, keep it simple. We're going to learn the looks, guys. Trading is patterns. Trading is the market doing the same thing every day, giving the same advantages every day, repeating the same process every day. We're going to learn the patterns that you can prove to win more than they lose, and you're going to be able to latch onto those and really foster an arena of success, guys. The spreadsheets that I'm giving you, um, I hate that I can't see my mouse. The first tab has in green what it means to have your 3 rules met on NinjaTrader. It also has in the red, hey, good morning, Bajoy. It's great to see you in here. It also has what it looks like when your rules are not met. And guys, this is just as important. This is kind of like the old red and yellow killed a fellow. That's your red section. Red and black, friend of Jack, if you know that on snakes. Guys, you got to learn the recognition so you don't get hurt. There's about 500 pictures of Nexgen clients who have presented in the room. That very specific pattern that we're talking about, you can drill these looks into your memory, guys. Repetition creates recognition. There's a place for you to put your pictures. When you take pictures of the perfect trade, when you see the perfect pattern, when you're following the rules beautifully, guys, build your trading plan. Commit those looks to memory. And then finally, the trade tracking sheet. And I had an awesome conversation with a buddy of mine yesterday about how effective the trade tracking sheet can be and how so few people use it. Every time you take a trade, you're going to take a picture. And when you take that picture, if you're really wanting to be in that good spot quickly, you're identifying the 3 advantages that create a trade on your chart. You're dropping that in the room and you're getting your private session with me and you're saying, hey, Mark, this is what I saw. This is what I did. Let's talk. Guys, every time you take that trade, it goes into your tracking sheet. This is where you're going to make sure that you're tracking your progress. And that annotated picture is going to come with 2 things. One, it's going to come with your analysis. And then there's a big space for my analysis. Hey, you said you had momentum, but it wasn't perfect. Let's talk about why. Here's a challenge that you had. Let's talk about how to fix it. And guys, my hope for you is that every morning you'll take 5 or 6 minutes out of your morning and you'll say, hey, guess what? That's not the picture. I'm going to ask myself, what worked, right? What worked? Well, trading with direction seems to work really well for me. Having the advantage of momentum seems to make things easy. Nothing in the way. Oh my gosh, it's almost difficult not to make money. And guys, you're going to lean on that. You're going to say, this is the good stuff. This is what I'm going to repeat. But if you're doing yourself a good service, you're also going to ask yourself what didn't work. Because everybody has a thing. Some of us have a thing where we fight trigger lines. Some of us have a thing where we trade directly into areas. That was my thing. I traded into areas, and until John Novak gave me a little corrective language to fix it, I kept trading into areas. But once you identify your thing, you wake up that morning saying, all right, no more early entries today. Okay. No more getting in before an area is reached. Okay, no more holding through trouble. And it sets you up for the day and it accelerates the learning. And guys, take advantage of having that spreadsheet. Take advantage of that trade tracking sheet. And most importantly, take advantage of having a coach in the room whose sole purpose in life is to help you get to where it is you want to be, guys. I'm not here to judge. I'm not here to knock you down. I'm here to help you learn to read indicators so that you can get where it is you told us you wanted to be. So you're going to get analysis, you're going to get rules, you're going to get coaching. Guys, I just dropped plans and spreadsheets for both in there. You literally will have every tool that you need to be successful with the software. The only thing that you don't have yet is time on the pond, as Pete says. You don't have the repetitions yet. You don't have the doing the same thing, seeing the same thing, describing the same thing so that it's easy. I want you guys to see something, a little glimpse into my world, if you will. 10,048 pictures this year. And when I take trades, I annotate every step of the trade. When I don't have rules met, I talk about why I don't have rules met. When I'm going through and I'm learning to read indicators, I'm taking pictures and I'm saying, okay, I know it's not a trade, but I'm really studying strong triggers right now. Let me just go back and take a picture. Let me describe the look. Let me write down what it means to me. And guys, if you get in this annotation habit from the get-go, what you're doing is you're saying, when I see this look on my chart, to me, it means strong triggers, momentum, rule number one met, and I'm even describing exactly how to get there. So take a ton of pictures, guys. Recognition happens quicker. Post everything in the room. Recognition happens quicker. I'm here to help, but you got to do your part. So when we talk about a high probability trend trade, I am a little wound up today. Look out. It's only 3 rules. That's it. We don't need more than that. Each rule, when true, identifies an advantage. And a trade is momentum, path, and entry. Momentum from strong triggers, a clear path from none of those likely to stop the market areas, and defining the perfect entry, guys. And you're going to be floored when you see how amazing these entries are. These 3 advantages happen on only 2 charts. That's all it takes. One of my favorite phone calls was from a gentleman that told me that there is no way you could ever be a consistent trader with only 3 rules. And it was funny. I didn't blame him for not believing. But then he did the study, and then he practiced, and he saw the pattern. He says, "Holy crap, Mark, it only takes 3 rules." And I said, "Yeah, I know. My brother's pretty smart when he put this together." So your large chart is a slow chart, guys. It's a broad stroke of a brush. It's a slow moving chart. It's hard to see change on a large chart. So we're going to use it to define direction, momentum, and areas. And it's going to take 1 bar. The most current bar is going to give you 2/3 of the good stuff, guys. It's going to give you your first 2 rules met. And before you ever glance to the small chart, you're going to be able to say out loud, I have momentum. My path is clear. It's time to go define an entry. Your entry chart is a small chart. It's a fast chart. It's literally an X-ray of that 1 bar. So I put the yellow square on there so you could see inside of the 1 bar, there is a retracement, there is a bounce, there is continuation, and that is the perfect trend trade. That's your pattern. This small chart allows you to reduce risk. It allows you to pinpoint entries. It allows you to maximize profit potential. So large chart leads the way. Small chart's nothing more than a way to take advantage of those 2 good things going on. And we use this, and I don't know when John created this picture, but it still speaks to me every day, guys. Who are you trading with? Who are you trading against? I want you to think of your large chart as a big crowd, as the men and women with the money and the influence. You can call them big business. You could call them the 1%. You could call them the institutions. I don't care what you call them, but they win more often than they lose. These are the folks that create trends. These are the folks that create that momentum we look for. These are the same men and women that react at those key areas on your large chart and make decisions, those areas that you're going to know about long before you get to them. Large chart wins, guys. But when they say, we want it to go up, we want it to go up fast, there's a small crowd. This is your small chart. These are the fighters. I enjoy the phrase ne'er-do-wellers because all they do is they say, you know what, let's push down. Everything they want is up. They stole money from me in 3rd grade. Let's push down. And that retracement, that tiny move, counter to the underlying trend, that's what gets us right to the point where the market is most likely to continue with the large crowd. This becomes your entry, and you will get so good at this entry that you will call your shots long before the market ever gets there. You will be waiting at their failure point with a limit order. And guys, this pattern is the pattern that typically wins 70 to 80% of the time. That's your edge. That's your advantage. Trading is probabilities. Takes indicators to get the job done. So here's the tools you'll be working with. Both charts have areas. Anytime you hear me say area, I want you to think horizontal line on a chart. They all have names. There are divergence highs and lows. This is a magenta, hot pink for you 80s kids, or a cyan, baby blue for the artistically challenged. Magenta, cyan. Anytime you see this line, you're going to say to yourself, hey, there was a loss of momentum. Right at that pivot, right at this exact price, the buyers ran out of momentum and the sellers took over. And right at this exact price, the sellers ran out of momentum and the buyers took over, guys. And these become like lines in the sand, and you're going to learn how to use them. You're going to see Fibonacci resistance and Fibonacci support. Guys, Fibonacci is created from tens of thousands of calculations. Every move, every pivot, every swing is measured, and Fibonacci retracements and alternates and projections are in place. 10 days back, synthetic time frames, guys, and from all of these calculations, you get this unbelievable singular line that's going to help you call tops and bottoms. It's going to help you see areas that are most likely to continue the market. You're also going to see yellow one-to-ones. These are fibs in the moment. Little calculation, 100% Fibonacci alternate. The people in charge love these measurements on a large chart. You're going to use them as areas that could stop the market. And then you're going to see this mid-band. So a mid-band is a moving average. And when price is above it, it's green and it may behave as support. And when price is below it, it turns magenta and it may behave as resistance. There's a lot of color coding. So areas are the same on both charts. They have the same names, but they do have a different role. Trigger lines do 90% of the lifting in this, guys. You're learning to read triggers is what we're doing right now. Small triggers are two solid lines. They are a fast-moving average. I couldn't tell you the numbers that go into it, but when I see small triggers, I know they're a fast-moving average. Large triggers are dashed. They're a slow-moving average. Small and large, that's really all you need to know. They look the same on the large chart and the small chart. When they are green, they're going up. When they're red, they're going down. You're going to use trigger lines to define the advantage of momentum through rule number 1. You're going to use trigger lines to define areas with potential to stop the market for rule number 2. You're going to use large trigger lines to define your amazing entries, allowing you to reduce risk and maximize profit potential, guys. Triggers show up in everything you do. So what we're going to do is we're going to break down each rule individually. Guys, learn it sequentially. They call this chunking in the education world. I'm going to learn how to identify strong triggers. Once I do, and I recognize that advantage, then I'm going to look for termination conditions. And if none are present, then I'll go look for an entry. It's like a flow chart. Rule number 1 says strong trigger lines. Everything starts on the large chart. When I have strong trigger lines, I will have the advantage of momentum. When you have strong trigger lines, you'll have the advantage of momentum. So trigger lines, in order to have strong triggers, when the background is green, the trend is up. Both small and large triggers must also be green. When the background is red, the trend is down. Both small and large triggers must also be red. Strong triggers is one look, guys. It has nothing to do with areas. It has nothing to do with price bars. Strong triggers is nothing more than a separation between the small and large. So in an uptrend, your small triggers will break above and away from the large triggers. That space indicates strength. I want you to think of scissors that are open. And when scissors are open, we can cut. They can cut you a check, as Jerry's once said. In a downtrend, it's the exact same look. The colors match. There's space between the two. The scissors are open. And guys, when the scissors are open, we can get some stuff done. It's time to work. When I have strong triggers on my large chart, the odds are favorable for the market to continue in the direction of the trend. That's that OFM acronym that you're going to see on charts. Odds favorable momentum pushes a market, and it's very difficult to stop. Odds favorable momentum, guys, this is the look that we look to break key areas on the large chart. Odds favorable momentum is when we are using that retracement on the small chart to buy or sell Fibonacci support. So I want you to get a visual. That is odds favorable momentum, guys. It's going to be hard to stop that level of momentum. But momentum goes away when the scissors close, when the separation between the small and large is no longer present, guys. This is weak triggers. And when I have weak triggers, anything can happen up or down. I'm literally describing my advantage going out the window. So is everybody good with that? On the very first bar, you're either going to have strong triggers, separation between the small and large. There it is right there. There's an area breaking. Or you're going to have weak triggers, small triggers inside of the large. The first advantage is gone. Does that make sense, everybody? Man, that was a strong trending market all day yesterday. And then it came to Fibonacci support, and that's where the market reversed. And what a great segue to the second rule, guys. When you have momentum, if you have momentum, once momentum is identified and verified, you're going to make sure that you have a clear path. And a clear path means that there are no termination conditions, none of those areas that could stop the market, guys. We want to make sure that you have room to profit targets. Rule number 2 is the most broken rule, because rule number 2 is the one that's going to keep you the most patient, guys. A termination condition, the clinical definition is the termination condition is a Fibonacci-based indicator with the potential to reverse the market. I say it's a horizontal line on your large chart, guys. And if the horizontal line on the large chart is where the large crowd is making decisions, the first step is letting them get there. So I see Fibonacci resistance when I'm all the way down here. Until price reaches Fibonacci resistance, it's a target. It's not a termination condition. And I can see Fibonacci support when I'm all the way up here. But until price reaches Fibonacci support, it's going to play as a target if I'm in a trade. It's not a termination until price reaches the area, until the large crowd arrives. Does that make sense? We're going to let price, dynamic Renko bars, get to the line. When they get there, you're going to count triggers, guys. And it's a pretty simple recipe. If you can count to 4, you can find success. If you reach an area and all 4 of your trigger lines are still below that area of resistance, or all 4 trigger lines are above that area of support, that means no triggers are through. Guys, what you have is a textbook termination condition. And there are really 3 or 4 things that can happen when price reaches and none of the triggers break. One of the options is that the area could break and the market could just continue right through it like it never existed. The market could also create maybe a big untradeable bounce, a reaction from the decisions, and that big untradeable bounce can pull you out of a long position. It could also reverse the market, and guys, if your termination condition reverses the market, that's a strong top, that's a strong bottom, and moves the other direction are more likely to be successful. Or they could just fight. And it's not uncommon to see fights happen right at these Fibonacci areas where they can't break them. There doesn't seem to be anything going on other than the large crowd buyers and sellers going after it. Your highest chance of success, if price reaches an area and no triggers break, is to sit on your hands and do nothing. Wait for the reaction, because you'll never be able to predict it. Most dangerous word in trading is it should. It should break, so I'm going to go long. It should reverse, so I'm going to go short, guys. So if price reaches an area, none of the triggers break, it's all right to sit on your hands. Price reaches Fibonacci support, the triggers don't break. That's where your giant reversal came from. Price pulls back to resistance. Even in a strong trending market, none of the triggers break. Continuation down. Price pulls to support, none of the triggers break. Price pulls to resistance, none of the triggers break. Guys, over and over. So it's not the one time that it does break. It's the 60 to 70% of the time it doesn't break. So no termination, no trade. They break. Here we go. We keep saying that word, break. How do I know if an area is breaking? Your trigger lines tell the story, guys. Every line you reach in the moment will be a termination condition. If I'm not in a position and price reaches support and all 4 triggers break or are above, it's a termination. I'm going to wait for the reaction. I'm going to wait to see what they want to do. If 3 of my trigger lines, both small and 1 large, absolutely smash through that area with momentum, now this area has the potential to break. This is the second trade on the plan that I gave you, trading the potential of the area to break. But because it's not broken, it's still not high probability. Only when all 4 trigger lines get below the area of support is the area of support considered broken. And you'll find that support behaves as resistance when that happens. So first it's a term, If I'm not in a trade, I'll wait for the reaction. If I am in a trade, I can make the choice whether I want to hold or whether I want to exit. Then it's the potential, and then it's a clear path. And your path remains clear until you hit the next area, guys. Then you go right back to number one. So first it's a termination. Triggers tell the story. Then it's the potential to break. Triggers tell the story. Then it's a clear path. Triggers told the story. And guys, when support or resistance breaks, it has the opposite effect. So this is a great example. Resistance breaks. Look how the market pulls right back to it as support. Right dissecting the area of fibs. There's one of those tails. That's the fight between the buyers and sellers. Resistance has the potential to break, and it's already behaving as support. And then once it's broken, it behaves as support definitively. Support breaks, behaves as resistance. Do you guys see it? This lesson pays dividends, allowing an area to break before there's a broken area, behaves as resistance. You're going to use that lesson in everything that you do, guys. But there will be times when your path isn't clear because areas are stacked. There will be times where it's multiple fibs, divergence lows, one-to-ones. And guys, this is 90% of your day. 90% of your day is spent reading indicators and waiting for the edge that your rules provide. The futures markets trade an average of $220 billion hourly. The S&P, on an average day, exchanges $174 million throughout the trading day. The NASDAQ is even higher. It's around 270. You don't have to be in every move. You don't have to be the first one in. You don't have to be the last one out. Guys, this methodology is designed to have you focused on the absolute best of the best. The easiest trades you will ever take will have the advantage of momentum with nothing in the way, and you're going to pinpoint on the smaller, faster chart exactly where that tail is most likely to form. This becomes your entry, and it takes $400 a day. That's it. $400 a day to put yourself in a six-figure income. That's all it takes. So guys, that's termination conditions. Is everybody good so far? Are you following me? You feeling good about it? Let's go to another chart and do a quick little review on momentum and path. So that is crude oil. We'll look at the S&P. Maybe. Did I open it? I hope that's the wrong one. Close that. We don't want that. We want this S&P. So the smalls are down, but the large are up. The colors don't match. Do you guys see that? It's not momentum yet, but look how fast things change in the market, especially right at the open. So what we're doing is we're looking for these triggers to roll so that they're pointed down. We're looking for the smalls to break below. We're waiting for this look right here, and we just got it. There's your momentum, and that's how quickly it happens. But price reached a divergence low. Now it has the potential to break. We're watching it live. This is how quickly you can read your charts with a little bit of practice. Does everybody see how price reached resistance? None of the triggers broke, and that's where the start down came from. Even with momentum up, you guys are going to see these long before you get there. So with momentum, with path, what you're going to recognize on the large chart is that the large crowd, let's go to this picture, without question wants the market to go up. They want it to go up fast, and there's absolutely nothing in their way to impede their progress. When those first two rules are met, guys, and I'm telling you, these first two rules will show up in everything you do with the software. We're going to go define a trend trade entry. We're going to go pinpoint the tail. And it's going to be so specific, or Pacific if you're a 3-year-old, that you're going to use a limit order. You're actually going to wait for the market to come to you. You're going to buy or sell a pullback, which means that you are going to enter when the small chart's going down if the large chart says up. Or you're going to enter when the large chart is going down and the small chart's going up. That's how precise it is. You're going to buy or sell a pullback at an area, at a fib, at a mid-band, at a yellow 1-to-1, because the same way on the large chart they can stop a trend, on the small chart they can create the bounce to go in the direction of the trend. But here's the key, guys. You're going to buy or sell a pullback at an area, and you want those areas to be inside of those large triggers. You have two sets on your large chart, or your small chart, forgive me. You have the smooth ones. These are the 5-1, small chart, large triggers. And I can use a comparison of those with the small triggers to say, hey, I've got strong triggers on the small chart. But there's also these step triggers. These are the large triggers from the large chart. Moving averages. Price returns to a moving average, regression of the mean. So your trigger lines will define right where that pullback is most likely to go. The areas inside of the trigger lines will define precisely where the market is most likely to bounce and continue in the direction of the large chart advantages. And it's just a pattern. It's the same looking entry every time, guys. When the large chart is up, when the momentum is strong, when the path is clear, your small chart is going to be screaming up with it. And we're going to wait for the fight. We're going to wait for the small crowd to show up, guys. And it begins with a reversal bar. And the hardest thing you'll ever do as a new user is watch that market go up without you. Somebody's making money. It's not me. I can't believe I'm not in this trade. These rules stink. Nexgen's a crock. Stupid snake oil. I hate Mark Novak. And then you get the reversal bar. Then the small crowd shows up to fight like they almost always do. And once the fight begins, and honestly, even before it begins, you're going to be able to say without hesitation, if they push down, they're most likely to go somewhere from the top of these trigger lines to the bottom of these trigger lines. That defines the retracement zone. I don't know where it's going to be, but I can really start to make it specific. And then you're going to be able to say they are most likely to bounce from one of those areas inside of the zone. And I don't know which one it's going to be. Is it going to be the high one or the low one? I don't know. But because the large chart has momentum, because the large chart has nothing in the way to create a bounce, your job is to study this pattern and develop the courage to activate a limit order just above the highest point of support, closest to the reversal bar. This becomes your entry for the highest probability trend trade. Once price, if price gets below the retracement zone, if price gets through all the areas most likely to stop it, guys, this is where the advantage of rule number 3 is no longer in place. This is where you no longer have an edge. And guys, once you get below the retracement zone, I call it the wrong side of the triggers. Once you get to the wrong side of the triggers, you don't know if, when, or where that market is going to continue up. So for the brand new user, there are no entries from the wrong side because you don't have an advantage. And you're going to use that concept where the market should not go, if this is going to be a winner, as a place for stops. And you're going to see it go in the other direction. When the large chart is down, when the momentum is strong, when the path is clear, let's beat that horse to death. Your job as a brand new user is to wait for a reversal bar, to say, hey, the fight is on. I know exactly where that retracement is most likely to go, somewhere from the bottom to the top of those triggers. And guys, the more they're spread out, the bigger that zone becomes. And I know that they're most likely to bounce from the areas inside, so I'm going to activate a limit order just below the lowest point of resistance, and I'm going to hope that the small crowd gets there, and I am going to hope that that area produces a bounce, and I'm going to hope that it goes off to my target. You will never know if your trade is going to win or if your trade is going to lose. But when you follow the pattern with momentum, potential to break, pull back to an area inside of triggers. This happened last week at 2:25 p.m. You can say without hesitation, this is a pattern that I can prove wins more than it loses. This is a pattern that when I follow the rules, typically wins 70 to 80% of the time. Typically. Whoops. And by saying that, by learning that, by accepting that, what you're also saying is that this is a pattern that typically loses 20 to 30% of the time. Every 100 trades I take, I will expect to lose 20 to 30. Does that make sense, everybody? Trading is probabilities, but you can stack the deck, load the dice. When you have momentum, when your path is clear, when you define your entry, you know exactly where your advantage is no longer in place. That's where your stop goes. And you know exactly where the market is likely to go. That's where you're taking profits. And it's not about the money that you can make, guys. It's about the execution of the method. It's about trusting the methodology so that you can say the same pattern that set up last week also happened in 2021. Strong triggers, 3 triggers through, pull back to the area inside of triggers, like this happened this morning. And then you can say, even in 2022, with 3 triggers through and momentum, I can pull back to an area inside of triggers, and it's nothing more than a pattern. Does that make sense, everybody? How do we study it? How do we trust it? How do we get to a point to where I never want to hesitate when the rules are met? Guys, you got to go back. You got to study. Get off of there. Hold on. And I'm going to show you how to do it. So we're going to go back on a large chart, guys. You don't even have to take a trade to do this. You can just do this. And if you're wondering, hey, did I miss something during the day? Was there an opportunity that I didn't catch? Watch this. I'm going to go back on my large chart. And when I have momentum, whoop, there it is. When I have a clear path or the 3 triggers through potential to break, I'm going to circle the tail on a small chart. What am I doing? I am circling the tail because that is where the pullback to an area inside of triggers is most likely to be. And I'm going to come back and I'm going to do it again. And I'm going to look for momentum. And that one, nope, triggers weren't through. That's not my trade. That one hit a fib. That's not my trade. Whoa. Maybe I really do have to be patient. Maybe sometimes there isn't an opportunity and I have to sit on my hands. There's one there. So I'm going to go back to my small chart and I'm going to go and I'm going to scroll back until I see those circles. And the first circle was a pullback right to support inside of triggers. The second circle was a pullback right to support inside of triggers. Do you guys see it? New users, what we're learning is a pattern. And what I find is that if you go through this process and you say, all right, I know what it takes to get me into a trade. I need momentum. I've still got a little separation. I need a clear path, absolutely. And then I need a pullback to an area inside of triggers, and we'll see what that looked like. And we're going to back up, we're going to back up, and we're going to look for momentum, and we're going to look for the potential to break, and there it is again. And I'm going to circle a tail once again. That was about 8:22 this morning. And now I'm going to open up my small chart, and where was that first circle? I had momentum. My path was clear. Can you guys give me a why? And let's do it like this real quick. Here's my trigger lines at the time of the reversal. And I don't have any areas inside of triggers where we put the circle. Do you guys see it? Rule number 3 is not met, and it went more than 5 ticks beyond. That's an avoidable loss. Oh, Andy, have a great day. But look what happened right next to it. There was a pullback right to an area inside of triggers. There was an opportunity to make some money before the one that didn't fit the rules happened. So you can go back. I would say that's an opportunity. On the first one right here, you didn't even see a tail. And if you scroll back again, let's look for momentum and path. There's another with the potential to break. And if I scroll back, holy smokes, there's a pullback right to an area right inside of triggers. Guys, do you see it? Help me out here. Let me know that you see what I'm talking about. This is a pattern that's repeatable. This is a pattern that's testable. This is a pattern that if you take the time to learn the language that creates the advantage, you never hesitate. If you take the time to go back and study the pattern, you never hesitate because you will know in no uncertain terms that this is a pattern that wins more than it loses. You've just got to learn it and you've got to ask for help as you do. Now, TradingView. TradingView is different, but it's similar, guys. TradingView is what the people using the Nexgen Pro Trader funding are on, 99% of them. I'm going to let you in on a secret right now. The next 10 minutes, when I talk about TradingView, you're going to be given a recipe for success that people in this room have already used to pass their funding accounts. On TradingView, the difference between the indicators is there are no Fibonacci areas on TradingView. There are zones. These zones come from a company named Chart Prime. They are $50 a month. I feel personally, this is my 2 cents opinion, that they are worth every penny. If you're not comfortable putting that little investment out yet as you evaluate, guys, reach out to me. I'll show you a free set. But zones are going to behave as fibs do. They will be areas not to be traded into. They will be areas to be traded from. Victor, you believe you have identified a look that if all the rules are met, it always moves significantly on the direction that it's going. I will share once I take a ton of pictures of it, different times to prove it correct. Awesome. So do me a favor, Victor, when you take those pictures, annotate them and send me 10. Do it either email or direct message, or John says, let's do it tomorrow. And then we can talk about it and refine it. I love it when you guys start to see patterns. It'll be fun. That's okay. John Novak will be here. He'll be looking forward to seeing it. There are so many ways to trade Nexgen, guys. And what I talk about in this room isn't the only way. It's a high probability way, gets you focused on advantages. There are 2 charts on TradingView. There's a 15-minute and a 1-minute. 15-minute is a huge slow chart, guys. I have stripped it of background colors. I have stripped it. Take a picture and annotate it, Victor. Let's see what you're working on. You don't even have to prove it yet. Take a picture and annotate it. Let's talk about it. That'll be fun. Guys, 15-minute defines direction, momentum, key targets, and terminations. It is so stinking slow. You don't need large triggers. It's too slow. It is so stinking slow. You don't need background colors. We're just going to define everything using these small triggers and areas. Your 1 minute is a fast chart, guys. It's an entry chart. It shows the immediate strength of the market. It defines entry points. There is a very specific way to read your large chart for the highest chance of success. It is not the only way to use it. I can't stress that enough, guys. You're going to start to see things outside of the basic, but it stands to reason. Let me learn how to make money the easy way before I try to complicate things. Direction is defined by the direction of the small triggers. It's either up or down. If it's right, you can't define direction. It's going to be difficult to take a trade in the direction. On the most current 15-minute bar, the triggers are up. My trend is up. I'm looking for long trades. But because it is such a slow chart, this second step is, I think, the most important part in reading the large chart. You have to ask yourself, where is the current price in relationship to the triggers? And we use the most current price, guys, because on a 15-minute bar, look how big that one bar is. On a 15-minute bar, absolutely. Here, I'll just get it to you right here from mine. I'll copy the link. There you go, Caleb. There's my workspace. Inside of one bar, you can be in all 3 positions. So we're going to define whether we are left of the triggers, whether we are right of the triggers, or whether we are inside of the triggers. And we're going to use that in reference to the highlighted price where the market is currently trading. Now this is going to define momentum, guys, and this is going to tell you and set you up for management. If I am left of the small triggers, I am on the strong side of the small triggers. This is the idea. Left, right, or middle, John, that's it. If I am left of the triggers, I'm on the strong side, the good side, the giddy up side, the odds favorable side. This is where bigger moves typically happen. This is where 1 minute areas are most likely to break. So if I'm looking for a home run, I'm looking from the strong side of the triggers. If you are right of the triggers, whether it is down triggers or whether it is up triggers, if you are right of the triggers, you're on the weak side of the triggers. From the weak side of the triggers, your 1 minute areas are most likely to produce a trade ending bounce than they are to break. I'm going to manage very assertively. I'm going to get paid at these areas. I'm not going to smoke the hopium. I'm going to get the heck out and I'm going to wait for the next trade. Weak side is not the strong side. And then if it's not strong or weak, guys, this is going to be, I would say, probably 70% of your trades. You will be in transition. You're not quite on the best of the best, but you're not on that weak side. It's just hanging in the triggers. This is where I'm getting paid at 1 minute areas. I'm getting to break even. I'm managing a little more assertively, but I still have the potential for that thing to run. So I'm going to cover my butt. I'm going to get paid, but I might hold a runner to see if they want to go. Guys, in one bar on the large chart, you can have all three. Know where you are currently so you know how to manage it. Because when you already know how you'll manage a trade before you ever enter, guys, it pulls a lot of the emotion out. Now I want you to see something. From the weak side of the triggers, those were up, that's where a reversal happens. And from the weak side of the triggers, that's where a reversal happens. So that's why we're super focused on management. And then the most important question, do I have room to targets? Do I have room to make money? Is there enough space for me to get paid? How many of us, you don't have to answer, but I'm going to raise my hand high, trade into areas hoping they'll break? Trade into areas hoping that the weak side will push it through. Guys, we all do, because this is where opinions are formed. This is where you use words like should. If I don't have room to targets, I'm not going to an entry, guys. So direction, momentum, and path. That should sound familiar. Use the term take and manage, which is just a fancy way of saying I'm going to break my rules and hope. Sometimes. I like to pick on my brother. Guys, first it's direction. It's either up or down. Then it's momentum. It's either strong transition or weak. Then it's room to targets. And guys, you will never go to a small chart to even look for an entry if you don't have room. That's rule number one for the trend trade. Not trading directly into 15-minute areas. The second rule is not trading directly into 1-minute areas. I can't stress clear path enough, guys. And then your entry rule, you're going to buy or sell a pullback. That should sound familiar. At a 1-minute area, at a zone, at a 1-to-1 or a midband, with a close on the weak side of the small triggers. So when you're looking for the trend trade long, when your large chart says up, when they're in transition, I know exactly how I'm going to manage it. And when I have room to targets, the market's trading all the way up here, very similar to how it is on NinjaTrader. And the second the small triggers on the small chart roll down, the immediate strength is down, guys. I'm going to look lower. I'm going to look for an area. I'm going to look for an area, a zone, a 1-to-1, a midband. And when I get there, I'm not just arbitrarily jumping in, because from the strong side of even small triggers on a small chart, that market's more likely to push down. So when the area is reached, my job is to wait for a close on the weak side, an up bar that closes on the weak side. Because if reversals come from the weak side of triggers, when everything here says up, that's my highest chance of success. And that's typically where the market begins to move in the direction of the large chart. From transition, a lot of you are getting paid right at trouble right here. You had room to trouble, and then maybe that second contract goes the distance. In a downtrend, first it's direction, the direction is down. Then it's where am I in relationship to the triggers? There's my highlighted price. I'm over here to the left, I'm on the strong side, and I have room to trouble. The second my small triggers turn up on the small chart, I look for an area higher. And I say it's got to make it to the area, but that's not my entry. I need a down bar that closes on the weak side of the triggers. You can just call it the correct side of the triggers, because that's where reversals happen. And that's where your trend trade typically goes. And from the strong side, it is giddy up all the way to the next 1 minute area. Guys, this is one trade. One trade that you can prove wins more than it loses. One trade that's going to give you a crazy level of success, at least the potential to have it if you manage it well. Momentum, path, pull back to the area in the retracement zone. It just happened in the S&P. But for TradingView people, I took this series of pictures this morning, and I want you to see this. I was watching the market, and I said, the triggers are up. I'm on the strong side of the triggers, and I have room to trouble. And this is where the adrenaline of being a day trader starts to kick in, guys. This is where you start to say, man, here it comes. I can't wait. I got to get into that market. And all I did is I just called my shot. I said, my rules say this is my area for entry. So no matter what it does before, it's no concern of mine. I got to sit on my hands. I'm going to wait. I'm patient. My best trade doesn't come till down here. If it gets there, I have no obligation to enter, guys. If it doesn't give me my look, I'll choose not to enter. And sure enough, it didn't go up with a close on the correct side of the triggers. It began to push lower. And sure enough, it got right to the area where I called my shot. And I'm like, whoa, I'm feeling smart. And then those mother scratchers pushed right through it. Never gave me my entry. I didn't take a loser. I didn't take a loser here because I wasn't trading from areas. I didn't take a loser here because I didn't get a close on the correct side of the triggers. But I sure as heck entered when it finally decided to give me my rules met, guys. And because it's the weak side of the triggers, it was very quick profits. And I actually made a mistake moving my stop. It was a $210 super fast, out before trouble, because I'm on the weak side of the triggers, and I didn't give any money away on the way down. I didn't break my rules at an HVA, which isn't an area for entry. I didn't break my rules when I didn't get a close on the correct side of the triggers. Guys, the difference between amazing days and difficult days is very often your ability to sit still and do nothing. And that's my first hour, guys. That's the best of the best. That's the highest probability. That's the set of indicators or the set of chart reading, the plan that's going to give you the ability to read your indicators, that's going to optimize your chances of success, that's going to give you the opportunity to practice, get feedback, and eventually write your own plan that suits your needs. So when we go into the second hour, we're going to look at everybody's pictures, guys. The one thing that I ask, and I know that I'm needy, is if you post in my room, if you post in NinjaTrader, I want you to describe momentum, path, and entry. Momentum, path, and entry. I want you to get in the habit of describing what you see, telling me what it means to you, telling me where you did it and why. Because what happens is sometimes it's going to be freaking amazing, and you guys are rock stars, and I can't believe how intelligent you are. And all you've done is your annotations serve as a recipe for future success. It makes it so you can go test it, so you can prove it, so you can learn to trust it, so you never hesitate when it's true. It'll also, when you annotate after a trade and the adrenaline is over and the trade is done, if you go back to these three things, it's also going to identify a challenge that may have been detrimental to your success, guys. Don't bypass the annotation. I can look at your charts and know exactly what you see, probably exactly what you're thinking. I want you to get in line with what you see and what you're thinking. And then on TradingView, I request that you do the same. Define your direction, where you are in relationship to the small triggers, and whether or not you had room, and then describe your entry. Because the small triggers roll against me, I wait for the pullback to the midband, I enter on the close on the correct side, and off it goes. If you don't bypass these steps, guys, if you go through them like your life depends on it, you're going to find yourself where you want to be. And now, as we go into the second hour, guys, this is an educational and informational room. I'm teaching you to read your indicators. I have given you every tool that you need to be successful. Now it's time for feedback. I don't call trades. I don't tell you what you should or shouldn't be doing. We go back to advantages each and every time so that you can build your foundation. Price reached Fibonacci resistance, even with momentum. Do you guys remember that phrase, untradeable bounce? That's it. That's your untradeable bounce. That's an avoidable loss. Price reaches Fibonacci resistance with weak triggers. Why on earth are you looking for a long trade? Two of your advantages are gone. Does that make sense? This is textbook, everything that we've talked about. And then when it is momentum and path, let's make some money right up to Fibonacci resistance. Guys, I didn't handpick this. This just happened live right in front of you in the market. So watch this. Let's see what the termination condition does. I'll be back in 5 minutes. We'll click on all your pictures. Before I do, because this is study and not review, let's see what Victor saw. Victor says, here's what I'm working on. When a white bar forms on the small chart, right at a trouble area, in this case, a supply and demand zone, and there's momentum on the triggers, small chart even better if both charts, we get an HVA line up or down, which matches the direction of the small triggers. It creates a very significant move in the direction of the triggers. I hope I'm explaining it correctly. Absolutely you are. So Victor, you want to see something really awesome? I'm sure that I can. Let me see real quick. Give me 1 second, Ron. That is speakers, that is microphone. All right, I am full tilt. I am full tilt now on my microphone. I hope that's better. Victor, here, let me do it this way. Awesome. I'm going to blow your picture up a little bit, Victor, and I'm going to show you exactly what you just described and what John Novak actually taught an entire masterclass on. There's your breakout bar, right? There's your down bar. There's its HVA line. So you notice this. Your next bar, if this bar, well, let's put it this way. If the rules are met and the next bar opens below the high volume area, that's a great look for more down. And conversely, it's a great look for more up. And let me show you a really cool example of it. And one of the ways that it's being used by some of your peers, and I hope you don't mind, this was just from a conversation that I had this morning, and I want you to see it right here, Victor, because what you've recognized is amazing, and it's something that we actually already teach. So there's your termination condition on the large chart. The high volume area trade, Victor, is coming from that green line that the breakout bar produces. Well, Jen, let me sing your praises here on recognizing patterns. When there's a termination, when there's a breakout bar, when the open is above the high volume area, Jen says, I'm not going to wait for it to pull back. I'm going to get in because the market's more likely to go up because the rules are met. So Victor, awesome that you recognize that. If you want to study it further, if you want to study it further, watch this video from John Novak. That is describing the exact pattern that you recognized on your own because you learned to read your indicators, because the trend trade became easy, because now you're seeing things outside of the very basic. Congratulations. That's our hope for you every time. And you absolutely nailed it. Absolutely nailed it. Good stuff. Guys, I'll be back in 5 minutes. Go stretch your legs. We'll watch the Renko bars. We'll watch termination conditions, reversing the market, making it a strong top. We'll look at the potential to break here. And if the rules are met for you, we'll also identify areas inside of triggers that may produce a bounce should the small crowd decide to fight. I'll see you guys in 5. second hour. I want to show you something real quick because this is pretty cool. You ready? I want to show you how it all goes back to momentum, path, and entry. I don't think everybody believes it in the beginning. I think a lot of people are like, man, trading's got to be more than that. That can't be all I need to make good decisions. And guys, I firmly believe that if you focus every time you take a trade on these three things, and let's use this bar right here for our example. So new users, Moham, who else is new in here? Justin, work with me. Z-Robot, you can jump in, right? Everybody can play along. Orlando, help me out. Does everybody see on this first bar, watch this, I'll make it easier for you. Small triggers below the large triggers, space between the two. Can everybody see that is in fact my strong trigger look? That's a look that lets me know I have the advantage of momentum. That's a look that says, hey, guess what? The odds are favorable for the market to continue down. Guys, rule number one is met without hesitation, without question. Now here is where it gets a little tricky. Price reached this Fibonacci support. When price reached the support, I have to count triggers. I have to say to myself, how many triggers are through? Can you guys see that the answer is 3? 2 small, 1 large. I'm going to go through the lesson whether you answer or not, just so you know. Because only 3 triggers are through, this is the potential of the area to break. This is not a broken area, but it does have the potential based on momentum, based on the trigger count. So far, so good. We've covered the first 2. In order to have the perfect trade with only the potential to break, I have got to lean heavily on momentum, and I have got to make sure that I have the perfect trade entry. Now, the rules for entry are one simple phrase that paint the perfect picture. I'm going to sell a pullback at an area inside of triggers. Can you guys give me a Y if you see that I do in fact have an area inside of triggers? I actually have 2. Entry rules are met. That's it. But guys, because it's only the potential, this isn't a high probability trend trade. I'm not just jumping into an entry. Divergence is a loss of momentum. Smalls inside of the large is a loss of momentum. A second divergence is even more loss of momentum. And guys, by the time this entry happens, my small chart has says, sorry, we don't have the push we need to break that area anymore. And when we talk about the KISS plan that I gave you guys in the room, and we go to that second trade, that 50-50 trade, there's some really important concepts that go back to momentum and path. The first one is that the large chart is strong. If it's not, the area is less likely to break. And the smalls must be outside of the large, strong triggers. And if it's not, the area is less likely to break. And if divergence prints on the 5-1, it's less likely to break. And this is a checklist designed to optimize your chances of success. And if you learn these very simple rules, and you know that you're using the checklist, guys, it keeps you out of this loser. And that's one of the things that the very simple plan that I give you is going to do for the new users. It's going to keep you out of trades that have a better chance of losing than winning. And I just killed my Ninja Trader, so let me pull that back up. And while that's coming up, I'm going to start clicking on all the charts that you guys posted. And we're going to go back to them, and we're going to talk about momentum, path, and entry. And I'm not going to play the trade police, and I encourage you guys to not play the trade police. But what I will do is I'll talk about the 3 advantages. We will celebrate every victory that's on the chart. We will address any challenges that are present. We will talk about ways to fix them. And then we will go on to the next chart. You are going to see trades that are rooted in momentum and path that don't follow the trend trade entry rules. You are going to see trades that you're going to say, hey, that breaks rules. Why did they do it? Well, they did it because it fits their plan. Everybody is at a different spot. Some people have been with me for 10 years. Some people have been with me for 10 days, guys. Everybody sees things differently. But if you take it all back to the very core, to the very basic, to the most remedial form, what happens is you can find a pretty solid level of success from the basics. So Paul gets us going, and Paul says, check it out. I didn't get a close below the small triggers. That's not my trade yet. And it went without you, right, Paul? Sometimes it's not your money. But guys, take pictures of the trades that you don't think fit your rules. I'm going to show you something. This is a document called The Pictures You Can Take. These are the pictures that I take every time I'm setting up for a trade, guys. That's why I have 10,000 pictures. I take a picture pre-trade before my rules are met. And I literally say, these are my advantages. This is what I need to see. And I'm calling my shots, guys. And we saw a picture of that earlier today. Before the trade ever happened, I knew exactly what had to happen for that trade to be there. So I can come back and study this one and make sure that my analysis was right. During the trade, did anything change? The management phrase, guys. During the trade, I record every stop movement. I don't have to annotate in the moment. I'll go back and do it. But during the trades, guys, these are where you can start building your trading plan. You can start saying, man, I exited, but I had all these advantages. Or I didn't exit, and I had all these disadvantages. After the trade, this is where I go back and I really write my rules on the chart. I go back to the core concepts that get me in. Advantages, disadvantages on the large chart noted. Entry and exits clearly shown and why. This is the one that I'm putting in my spreadsheet. This is the one that I'm going to go back and study. And then this one is the no trade, guys. Why didn't you take the trade? Were the rules not met? And very often you're doing this to remind yourself that rules are the lifeline. They've been proven to win more than they lose. And your best shot at trading longevity comes from following the plan, guys. And when the rules aren't met, rather than take a trade, it's okay to take a picture to say, you know what, it's just not quite what I need. There's one more little blurb on there. Pictures 3 and 4 are the best ones to put in the room, guys. These are the ones that I want to see because they're annotated. Making sure that your chart reading is correct. You'll get feedback on everything. And if it's a no trade picture, guys, it's not only a great lesson, but often your no trade pictures are actually great setups. If you're a brand new user, there's going to be a lot of times where you're going to talk yourself out of trades because you believe you didn't have an entry or you believe you're erring on the side of safety, when the reality is you're putting weight on things that aren't important. And this is a great example, and this is a no trade picture that I get often. Large chart is up, large chart is strong, large chart has the triggers through, and John Novak's going to laugh because I sent him this picture 1,000 times before I learned the lesson. You're going to say, but market reached a termination condition on the small chart. And I'm going to have to say no, because termination conditions happen on the large chart. Or you're going to say something clever like, but Mart, divergence, I can't take this trade. And I'm going to have to say, well, it was the perfect trend trade. Super yes to the upside. And that's the perfect trend trade. Beautiful entry, John Novak, right at the area inside of triggers. But what happens, guys, is when you post those no trade pictures, very often there may be a lesson. There might have been a trade, and that's going to open doors for you. So, all right. Down, no room. You chose not to take the trade. That's okay. 79, 79. And if you look at it, there's not a lot of room to get to trouble here either. Great patience, Paul. You said yellow 1-to-1s on the 15, but I don't see them. Did they disappear? I just see a no trade scenario. All right, 15 we're up. Guys, I do want to address this because this is common. On a 15-minute bar, they couldn't have been up yet, right? And what happens, no worries, Paul, they might have been there and just may have reset. When you have triggers that are absolutely flat like this, guys, they're either going to turn up and put you on the strong side, or the market's going to continue down and you're going to go down with it. When you can't tell if they're up or down, if they haven't committed, to the direction yet, and guys, that happens on the bar that changes direction every time. This bar, they would have been indifferent. Once this bar finishes, now I have my answer. And that's exactly what you were going through there, Paul, on that particular trade. You were saying, okay, if this does end up going up, I'm on the strong side. But it didn't, and the triggers never actually got to the upside. So price is skating right across resistance, right? Or it pulled back to support, and it's skating, and it's skating, and it's skating, and it gives you a close above, but the trend is actually still down. And sure enough, they just went down with the trend. I don't see anything wrong with the trigger. Like, if these were up, it's the perfect entry. But it's that little indecision, and I'm noticing this on the 15-minute. When you're on that let's make a decision bar, sometimes it's more advantageous to let them commit to up or down rather than trying to predict whether it's going to be up or down. Does that make sense? But I think everybody in the room's probably made that mistake on TradingView more than once. You've got these also, have to go to work. Yeah, give me just 1 second. Are these all the ones that you already posted, Wayne? Just so I know. Or do I have to go back and source the other ones as well? I don't want to miss any. But yes, guys, if you ever have to go to work, just let me know. And we'll get you taken care of. So, Paul, I'm going to come back to yours. We're going to get Wayne taken care of real quick so he can head to work. Triggers down, strong side, room to trouble, odds favorable momentum, and you just jump in, right? You jump in directly into one-to-ones, hoping they break. Is that right? Yeah, John, have you seen what Wayne does? It is not a four-letter word. So, Wayne, this is that look, man. If you're going to jump into it, that's the best look. But those are right into the one-to-ones. Next bar gets you below and really heads down. And it's awesome. And then it never slows down, so you don't jump out. I love everything about this trade. I think that in the grand scheme of the things, maybe one bar early. Does that make sense, Wayne? But there's that same pattern that Victor pointed out. Breakout bar to the downside. Next bar opens below the HVA. That's when you got in. It's like 99 advantages and one challenge. Nicely done. And then that is Victor. Was that it? Was it just the one, Wayne, in there? That's a dead link. That's a dead link. Here we go. This is a Wayne chart. Triggers are up. Strong side of the triggers. It skates along support forever. And then you get in. And off at trouble. And then protecting yourself behind it. Absolutely perfect. I like it. Nice job. Nice job. John just answered that question. Not a chance. Strong side, out at trouble. And yeah, you gave it a shot. And I like this, Wayne. And guys, I want to point this out. Wayne, I hope you have a second. Price breaks above, so resistance behaves as support. You have strong triggers. Right here is your momentum trade. If it's going to work, that momentum trade is taking you up with this look. If it's going to fail, you knew exactly where its failure was imminent and chose to exit because your advantage is gone. This is great management, guys. where when you're in the trade, you start playing out the if-then scenario. If the market pulls back to one-to-ones in a zone with strong triggers, then that's a momentum trade. And where does that trade fail? Right where Wayne got out. I love this management, Wayne. That is solid. That is pragmatic, if you will. And then let's get your other ones real quick so we can send you off. Are you on the Daytona again today? I've got 4 more from you there. Let's see. Nice. Tested the zone 4 times. All right. Let me see what you're doing here. Weak triggers with price moving up. Looks like you traded directly into a zone, maybe? Yep, traded directly into trouble, and trouble held and stopped you out. It's almost too easy, right? Don't trade into stuff. Brick walls. Right above, man, I'm telling you guys, and Wayne, we talked about it really just ad nauseum yesterday. That's not a break. That's peeking its head. So that is the equivalent, Wayne, of saying, and I want you guys to really get this. That's the equivalent of saying resistance broke right here. Does that make sense, guys? You guys that are trading the little prairie dog poking of a head, you're saying, okay, resistance is broken, but it's not. And I'm seeing this as a very avoidable loser for a lot of you. Let it break, let it pull back, and then you've got a fighting chance. But that's one of the biggest trading view mistakes because we hate to wait that long for a minute bar. And now we've got up, strong, pull back, break above, and see how it goes sideways, right? Never breaks, never breaks, never breaks. And then when everything rolls, you find a way. And we saw that one. That's the one with the good stop. Nicely done. Beautiful. Great stuff, Wayne. And I think that really is. I think it's a great lesson. That little peek your head thing. Little peek your head thing. John, you're going to put me out of a job if you give everyone feedback before I do. All right. Paul, we saw this one. All right, here's where we're getting back into it. I'm just messing with you, John. I'm out anyway. Tomorrow don't show up. Dang it. I just got fired in front of everybody. That's tough. So Paul, down, strong, room, right? I've noticed that you've gotten out of annotating your large chart and telling me what's going on. This zone was higher up. These move every now and then. So here is your break below resistance. Here's your pullback to resistance. There was your close below. You're in at 60, a little bit low. So the question on this one, Paul, and I want you guys to see this. If this is your entry bar, how does it serve you to be in 10 points later? Because by the time you jumped in, I guess you had room down to here, but that's a good looking entry. Your momentum entry didn't happen. So these late entries, guys, these late entries don't typically serve you. And that did hit and it formed, and that if it shows up mid-trade, it's okay to respect it. And it did just pull up a little bit and then did everything that the indicators say. It's not cool when they print in the middle of it, Paul. That's what I was saying. Sometimes you're the butt, not the boot. It's a good look. It's nice. I think getting in a little earlier makes sense. Yeah, it was a great trade. That stupid zone showed up and messed up your good time. That happens sometimes. Down again. Late entries. Late entries. And guys, these late entries are killing you guys. Down, transition, clear path. You were below the small triggers all the way up here, Paul. And it gave you a fighting chance to make some money. When you're in at 71, right at the HVA, I like it. Momentum HVA trade. It just didn't go. It just didn't go. And it's okay. If you are, let's see, 71 to 62. If you're $360 deep into a trade, that's all right. You can be late, Swathy. We're just glad to have you at the party. If you can be $360 in a trade, is it okay to take some of it off? Is it okay to get paid? Because you're on the transition, not the strong, right? It's already been to trouble. This is saying, I don't see anything in the way. It's got to go. Remember that the goal of trading is to get paid, guys. Put something in the account, protect your position, take and manage, especially if you're in late. The perfect entry keeps you in for much, much bigger moves. Good stuff, Paul. Above the small triggers, you say it's into a zone, so it's directly into the large chart zone. Don't take it. Absolutely beautiful. Rule not met. Pete, everything says up with ferocity. You jump in, you get paid. Trailing stop takes you out at the perfect momentum trade, Pete. Do you see it? That's where that automated stop did you dirty. Because it put you in right at the perfect momentum trade or took you out. And then you just take the perfect trend trade and get paid again. And I love this. And guys, pay attention. Pay attention to what Pete did here. He made money on his way to trouble, let trouble either break or hold, and then he made money from trouble. Momentum and path, guys. That is the core of all the goodness that comes your way. Nicely done, Pete. Great patience. All right, trend trade. I love this one. Triggers flat, price on the weak side, almost no space to the next area. I feel like you got a lot of space to the next area. Why did I jump on this mule? Because the triggers were up, because you were on the weak side, because you had room to trouble, because you had a pull back to an area, because you had to close on the correct side of the triggers. Victor, that's why you jumped into this mule. Small chart, who cares? You should not have jumped in. I disagree. It's the perfect trend trade. But the challenge, Victor, was that you were on the weak side of the triggers and you felt like it had to do more than it was doing. Does that make sense? The challenge wasn't the entry. The challenge wasn't the chart read. The challenge wasn't anything other than the management refusing to get paid at trouble. And you turned a $360 trade into a $75 trade. Guys, management is where great things happen. I love everything about the trade, Victor. I took the same trade because it fit the rules. But guys, once you know where you're at in relationship to those small triggers, you know how to manage. You got to accept that. You got to accept that they're not all home runs. And then once again, Pete, like a broken record, all the momentum, potential to break, get in before trouble, get out at trouble. Life is good. Let's just keep making money in small chunks because it all adds up. And then it comes down and the momentum is strong and you miss the perfect trend trade, Pete. And Pete says, dag nabbit, I missed my perfect trend trade, but with every indicator down and strong, I'll still make my money because I'm Pete Woodworth and that's what I do. When the triggers are strong and there's nothing in my way, it turns out there's a lot of money to be made in the markets. And Pete, you really do it well. You and Ron. Ron. Everything is up. Back of the price bar clears trouble. Nothing in the way. Get out of trouble. Base hits by golf. Amen. This is the chili dog, my friends. Ron C. came up with this trade. He shared every one of his rules with the room. This is an awesome filler in between trend trades because when you have momentum and path, I'll be darned, that market is hard to stop. Thank you, Ron C. The chili dog. And then Andy says, Mark, when I have odds favorable momentum, I know the market is likely to continue in the direction of the trend. When I have a clear path, I know that there's nothing in the way on my large chart to create a bounce. And when I pull back to areas inside of triggers, I'll be damned if the market doesn't go right up to trouble more often than it doesn't. Let's take a quick trade, Mark, from 32 to, what was that, 42.32 up to 42.34. That's, is this gold? This is gold, which means that is up to 34.32. I'm doing math. I don't know. That's like a $700 trade. Nicely done, Andy. Guys, that is everything we talked about this morning, and Andy just put it into play for you guys. All right, let's see what we're doing. Trend trade, read all. I must have a habit of not reading all. Triggers down. Price on the strong side of triggers, space to the next trouble area. Guys, once you learn those phrases, life gets easier. Small chart. Price closes on the right side of triggers after the triggers rolled. Triggers rolling is not a rule. Price on the weak side of the triggers is. Entered after clearing trouble. How do you figure? Got out at the next trouble area for $3.95. So, Victor, you didn't clear trouble. You bounced from trouble, right? Small triggers roll. Price pulls back to the zone. Closes on the correct side of the triggers. That's your trend trade. That's it, right? And from the strong side of the triggers, that area never even blunked. It never blanked at all. It just screamed right through to the outer band. Lesson learned, watch the triggers. There was strong momentum down. Small chart could have stayed in the market for additional gain without any risk. From the strong side, setting up management. This is where you say, you know what? I'll take one off at 20. I'll pocket my $100, but because of the strong side, let's see if they don't make it down here to 0750. Management is where fortunes are made, my friends. But great entries create very manageable trades. Nicely done. And then Victor, I'm gonna keep helping you point out this pattern. Do you see the breakout bar down? Do you see the opening of the next bar below the HVA? Even more warm fuzzies from the strong side of the triggers that it's probably going to blast a little lower. I'm going to tell you right now, Victor, you're going to get so excited about that pattern, you are going to mess it up a few times. So make sure that your rules are met. Pete, we saw this trade yesterday. Who posted this one yesterday? But it's the exact same look. Price reaches a midband. Large triggers are a full bar away. Small triggers roll, not even close to a clear path. There's your pullback right to the small triggers. That is the Nexgen 2004 momentum or edge trade. You did it great, Pete. Out at the first sign of trouble and then just holding it. Absolutely beautiful. Get paid, back in. So nice. Great job. Momentum and path, guys. Downtrend, absolutely. Got in on a pullback, made some money, and closed. Who is this? Who was this? Help me out, guys. Got some good stuff happening here. But I'm not sure that is this Estefania? Yeah, it is. You want to see something cool, Estefania? Downtrend is awesome. Downtrend is just a color, though, right? It's red. Awesome. You only described the trend. But look at this. Momentum, right? 3 triggers through with momentum. Pull back to an area inside of triggers. What you just did is you took the perfect medium probability trend trade. Now the question is, why did you jump ship? Right? So management says, with momentum, with nothing in the way, with the perfect entry, what changed to get you out of that trade? Why on earth did you only make $50 on a trade that probably had the potential for hundreds and hundreds? What didn't you trust? Scary cat move. Okay. So I'm going to ask, and Estefania, you don't have to answer. Do you have rules for exit the way you have rules for entry? Do you have something written out on how you're going to handle the trade once you get into it? And John's going to cover this tomorrow. Estefania, he's doing it just for you tomorrow. Fearful exits mean that you don't trust this pattern, and that's okay. Until you see it 100 times, you may not. That's a lot of meat on the bone. Nothing ever changed, and it just got better and better. It's a beautiful trade, Estefania. Pay attention tomorrow on the management. It'll probably change your life. Counter trend, white bar, really shouldn't work trade. Lots of practice, lots of Mark's input helped make this one work. When price reaches a fib, when divergence prints, when you get to the strong side of the small triggers, it almost always, more often than not, gets to the reversal bar marker. Look where he took profits. He got him at trouble. Absolutely beautiful. Base hits. Ron, I hated this trade at first. Gave me heartburn. Beautiful trade. Pete, everything is screaming down. Textbook momentum trade. Textbook Nexgen momentum trade. Quick profits. Out with a loss of momentum. Because if momentum gets me in, loss of momentum gets me out. Turns into a trend trade. Wrong side of the triggers, so you catch it on the way down. Easy money. Momentum and path, guys. Momentum and path. Victor, we talked about that pattern. We'll talk about it more and more. There it is again. You jump the fudge in at 64 in the middle of a zone. And sure enough, it works. Let's see what it says, though. Trend trade. Price on transition, so manage via small chart. Space to next area. Am I reading it wrong, Victor? It looks like you traded directly into a zone. From 64? Is that right? And where is 64? 25,364. So you did trade from transition, mostly weak, directly into a zone with the large triggers up. Small chart. Well, if I read something that's inaccurate, I got to stop and address it, right? Small chart shows price closing on the right side of triggers, and I jumped the fudge in right at a zone, which should not have done. This time it worked. I recognized the mistake, got out right as it was going towards the next trouble area, outer band. Like I said, luckily got out with 395. Have to learn to see all these obstacles before you get in the trade. I'm sorry. I saw space to next area. There was space on the large chart. There wasn't space on the small chart. Victor, there's that darn pattern again. There's that darn pattern again. Breakout bar down. Opens below. It's okay. We all make mistakes every now and then. Odds favorable momentum. The second trade is way better. Decided to stay longer. All right. Who am I looking at here? This is... We're getting close. Is this Estefania again? Is this Pete? All right. So strong triggers. When you get in, potential to break, you just jump in, and then you jump right back out. And then you get in again, and you get right back out. And then you take that one to trouble. Nice. So, see how your small triggers never blinked on you, Estefania? That's wonderful. And great job getting out of trouble. Good job. Nice longer hold. All right, original trend trade chart says down 100%. Divergent said nope, you'll have to wait. Dance, 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 dance. I'll try a short from the 1-to-1s. And then it rolls and gives the easier short. And it gives the easier short, John, at damn near the same price as the first short that didn't work. Awesome. Awesome chart read. Guys, this is the stuff John's going to be going through tomorrow in this room. These are the things John's going to be talking about in great detail in the room tomorrow. Talking about ways to read that small chart, to give you an edge, to really open up the idea that you're in control and you're going to know exactly what you should be doing because you're going to be able to describe the rules. You're going to be able to recognize the rules. All right. Stop doing trend trades on the small chart at fibs and 1-to-1. Da, da, da. But the perfect long, John says, I'm going to tighten up. If it runs, great. If it doesn't, no big deal. That is the perfect trade. Love it. Nice job, John. I'd let you teach my class. I would let you teach my class. All right. We're going to see what John said and what I say. Triggers down. Strong side. Nothing in the way. You jumped in at 19. Pull back to the area. Close on the correct side. And I believe chicken shit was the phrase, right, Pablo? The perfect trend trade from the strong side of the triggers. Look what it did. Oh, that's all right. That's a good lesson. That's an outstanding lesson. I'm not even going to read what John said. I'm going to remind you guys that management is where fortunes are made. All right, Miss Swathy. Here we go. All right, all triggers are above. The path is clear. You entered at the pullback, worried about divergence on the small chart, exited quick. Awesome. So Swathy, we're going to go back to language. The market is in a strong trend. You have all the momentum and nothing in the way. Swathy, your large chart is perfect for a trend trade. Does that make sense? Your large chart is perfect for a trend trade. Now, I'm going to write the rules for entry one more time. So the rules for entry will say that you will buy a pullback. That is the small move down. You will do it at an area, at Fibonacci, at a mid-band, or at a 1-to-1. And that area, for the highest probability, needs to be inside of triggers. And the challenge with this one, Swathy, is that you never even made it to an area. Now, the large chart was perfect. When the small chart is not perfect, one of the things it's your right to do is force that market to go up. Force that market to go up with the large chart, right? The market can do whatever it wants, and it may go up and it may go down, but you didn't wait for the green bar to print. I can see your entry. You entered at the bottom of that bar. A better entry without a defined area is at the top of that bar, waiting for it to actually go up and finish. That's what we call a reversal bar. And what that reversal bar, that up bar that finishes, it's letting you know that now your small chart is going back in the direction of your perfect read of the large chart. Does that make sense? So it puts you in a little bit later, but it gives you some place to place your stop. And once it started going, well, if you can't define entry, it makes it easier to wait for the bar to finish. And then once it finishes, and let's do it one more time. Once it finishes, you can place your protective stop just below that bar as well. So now you have some place to protect. And the reason we do that, Swathy, is look at this. Once you get below the triggers, you don't know where the market's going to stop. You don't know if the mid-band's going to hold. So if you're patiently waiting for the reversal bar to finish, do you see how it never happened? You wouldn't have to take a loser there if you decided to take a trade. Does that all make sense? I love this chart. I love your large chart read. And I think that you were really in line with the correct entry, but a little bit of patience gives you a place to put your stop. And hopefully, eventually, it gives you the confidence to believe that the market is more likely to go to that red line. So instead of out at 46, you're out at 48. And when you're out at 48, that is, what is that? That is 2 points, 100. That's an extra $300 on the trade. Does that all make sense? Beautiful large chart read. No, this is not the chili dog trade. Not the chili dog trade. I like that you call it the corn chili. The chili dog trade happens when everything is going up. Here, it's going down. Let me find you an example of that chili dog trade. Just so that you can look at it for reference. Let me see if we have one of Pete's in here. We don't. Let me get to Pete's picture because Pete and Ron both do it really, really well. I'll look at who's ever I get to first. Well, that's a horrible example. So I'll just pull up the actual trading plan. So guys, if you're interested in that chili dog, there's the plan from my study. But what it is, and this is straight from the guy that created it. Straight from the guy that created it. There are some things that have to happen. The first thing is that on your large chart, all of your price bar has to get above trouble. So you had that one perfect, Swathi. And then the next thing is it's got to be strong, and you had that one perfect. But the entry comes from the left side when everything is going up, because once you get to the other side, you don't know when it's going to go up again. Does that make sense? So I believe Estefania said she just had one. When everything is down and strong, the chili dog is jump in when it's all down and strong, and then just get out at $110 a contract, at $100 a contract, $112 a contract. And that is the look. And you were so close, which is awesome because you're so new to it. So the only thing that we missed on it was you got in on the wrong side of the triggers. Does that? I love it. Good job. And now I know you're looking for that trade. So we can really go back to that a lot and make sure that that you're seeing things. So let's go to your next picture. Whoops, let me mess that up. Here we go. Open that up. All right. So all triggers are down, below trouble. So divergence, Swathi, that's twice that you're worried about it. So divergence becomes worrisome on the small chart. Let me bring up the picture for you. Whoops, wrong one. When your large chart is beautiful, the way you're allowing it to be, when your large chart is perfect, Swathi, there's only one time I want you to get scared of divergence. Let me find my picture. And if I go too fast, tell me. One divergence doesn't worry me because very often it gets me to my great entry. Two divergences doesn't worry me because very often it gets me back to my great entry. Three divergences, when the large chart is perfect, that's what's going to keep me out of that trade, because three divergences is where very often you see the market push in the other direction. John had a great example of that. Well, I think I deleted it. Does that make sense? So one, not going to worry about it. Which purple line are we talking about? Hold on. Whoops. Are you asking about this one right here? Cool. So this is what's called a small swing 1-to-1. Don't pay any attention to it. On the NASDAQ, it becomes important. On your small chart, it's not. It's too small. This is from this tiny move right here. And it doesn't have any impact. So here, there's your pullback to the area inside of triggers. That was your perfect trend trade. And then here where it pulls back, you don't have an area inside of triggers. Do you see that? how the mid-band is on the wrong side? And Swathi, this could be another one of those times where you say that my large chart is perfect and you're killing your large chart reads. It's beautiful. But because my area is not inside of triggers, maybe I'll let that down bar and then go with the trade. So we're seeing a lot of opportunities to kind of get outside of that very high probability trend trade and using that confirmation, that reversal bar, to get you into the market because your area is not inside of the triggers. Your large chart reads, Swathi, have been beautiful. Your large chart reads are doing everything that we would want them to do to go to the small chart and look for an entry. Estefania, same thing, right? Down, strong, path. That was your entry at the area inside. And if you didn't take this entry, there's your opportunity with the confirmation bar from the wrong side of the triggers. Does that make sense, Estefania? Once you get to the other side of these triggers, guys, it's not always a great scenario. Hold on. Because once I get to the wrong side of the triggers, I don't know how far up that market's going to go. Once I get to the wrong side, I don't know how far they're going to push. Once I get to the wrong side, I don't know how far they're going to push. And you see it over and over and over. So one of the things you guys can do is just force the market to go down for you, right? Right now, I've got 1, 2, 3 divergences in the same price range. Everything's on the wrong side, so we're just going to wait for it to get better. Great lessons here. Great lessons here. All right, Pete, another boring Pete trade. When everything says down, when the path is clear, Pete jumps in, makes money, gets out with a loss of momentum. So you chili doggers, check it out. Everything is down. Stare at where the small triggers are versus the large triggers. Our location will make easier. John, just save it for tomorrow. Nobody understands your jumbled words. I'm kidding. I'm kidding. So guys, what he is saying is where are the small triggers, right, compared to the large triggers? Here they're still below and the market goes down pretty quick. Here they're getting above and it pushes a little higher. Here they're still above, we get another push higher, and now everything is down and they're getting below the large triggers, synth triggers too, yeah. So, but you can use that and you can see those losses of momentum, and with losses of momentum it may go higher. Whoops. Let me get Swathi, I believe this is you again. Thank you for posting so much. So you entered on the pullback. Stop loss met at blue Fibonacci. Beautiful. So Swathi, large chart said down. I love, you're doing wonderful. Large chart says down. There's absolutely nothing in the way. And then Swathi, if you wait for the down bar, you have some place to put your stops. But this is perfect. It's a little early. And it goes right where it's supposed to. So for me, Swathi, there's your area, right? You see the mid-band right there? That's your area. So I want you guys to remember, trades come from areas. If you're looking for a trend trade, you need a mid-band. You need a fib. And then that down bar right off of the fib is the perfect entry with the perfect conditions. And it's the perfect result, and you did wonderful. Nicely done, Swathi. Does all that make sense? Let it get to the area, because the area creates the bounce. Yeah, and then down it goes. I love it. Absolutely beautiful. Swathi, I feel like in 3 days, you have turned a giant corner. You have really focused on the large chart being great, and you're starting to get your entries. So great job. Like Mark said, with this look, price tends to go within 2 or 3 ticks of the reversal bar. straight from terminations, pivot stop out, strong side of the triggers, the pirate trade. Yarg. You're welcome, Swathy. I told you we would work through this until you get it. I'm excited. The pirate trade. I love it. John Novak, you should pay attention to this one. You love to be first. Ron found the pattern and wrote the rules. Estefania, was that your chili dog? Yeah, you rock star. You're so good at that trade that Pete started copying you. There's another one, guys. When everything says down and there's nothing in the way, there's a way. Awesome. John, you're chomping at the bit to teach. I love that. Won't anymore now. Have a great day tomorrow. You get pig fucked every time you try that one. Ron can keep it. Well, the difference is Ron says, that's a tiny little move. Let's get paid. John says, hell yeah, we're going up 1,000 points later. I love it. I love it. How cool is this, guys? Check it out. Everything down, nothing in the way, jump in, get paid. Everything down, nothing in the way, jump in, get paid. Very nice. Very nice. If you're new in my room, you're not seeing a lot of trend trades right now. And you're probably saying, why the hell is he making me learn these trend trades? Because, guys, once you understand momentum, once you can understand path, there are a million ways to make money with this software. All right, Paul. This is that heads up bar that history shows a greater potential for longs here. Man, Paul, you're starting to add parts that don't belong in the rules. Did you know that? Did you guys notice that John Novak sucks at leaving as much as I do? He'll say he's leaving, but he'll stick around for another 10 minutes. Nexgen Jen was making fun of me this morning about that. Thanks, Ron. Don't say that. My kid's flying in tonight and Jenny flies out Saturday. Right on, Paul. So let's see what happens. 15 down, strong. Clear path. Market pulls back. I don't know that there's areas up there. And you just jump in on the way down. 94.50. You have room to trouble. And you make money. So, Paul, here's the question. No, you're fine. Here's the question. Why didn't you enter on this close before at 99 with even more room? My guess is, Paul, it's because you're not coming from an area. You noticed that it didn't make it to whatever area was up higher, and when it started going down, you probably very eloquently said, oh shit, it's going without me. I better get into that trade and hope it makes the area. Which is a very real thing among traders. But at 1042, that's the NASDAQ, right? Let's go see what it did at 1042. Dun, dun, dun. So there it is right there. So I was waiting for the pullback to the area. It didn't get there. Oh shit, I better jump in because it's probably going down. Is that fair? I've done it 1,000 times. But when it didn't give you your entry, you jumped in and hoped that it went. I'm not saying it's wrong. How do you make this trade repeatable? If the large chart is down, if I'm on the strong side, if there's room to trouble, if all my indicators are pointing down, I will JTFI because I got nothing but room to something that creates a bounce. And Paul, I don't think there's anything wrong with your trade. Not at all. I just want you to know why you did it. Maybe you can manage it a little differently. You can make it repeatable. You can do the same thing every time, and you can prove that it wins more than it loses. All right, strong trending market. You sell the mid-band. You make a little money. Nicely done. Estefania, working that strong trending market. Where was a better entry? How about where the rules are met, Paul? So the best entry is where the rules are met, because that provides a pattern that you can repeat, that you can verify wins more than it loses. Did your rules ever get met, Paul? Do you have a plan that says, if I don't get my trend trade, I'll just jump in? Because that would be the checklist. Large chart says we're going down. Small chart didn't give me an entry, so I'll just jump in and hope it goes down. I'm not saying it's the wrong trade. You gave yourself room to trouble. You had every indicator going down, but it's not a momentum trade. It didn't pull back to an area with momentum. It's not a trend trade because it didn't pull back to an area and close on the correct side. It is literally a jump the fudge in trade from the strong side, which creates an advantage, with a clear path, which creates an advantage, with every indicator down, which creates an advantage, with room to trouble, which creates an advantage. So, Paul, it's stacked in advantages. It's stacked with advantages. It just doesn't fit rules. That's it. Let's just jump the fudge in. Black Prince, you have a ticket in with Tech. I believe Tech will reach out to you. They'll message you. I see John Novak coming in. We'll get you taken care of. Nope, John Novak stopped typing. He's probably going to check Tech right now. But usually they'll reach out to you either via Discord. Did you click your ticket to enter it into... so John's gonna jump in and help you with that one a little bit. But we will get you taken care of. Paul, does that make sense? I'm not knocking the trade. I'm just saying, let's make it repeatable. One of the great things about day trading, guys, is that you're in control of everything. And you get to choose whether or not it fits your rules. John loves this trade. From a weak top, triggers never roll. Everything begins to go up, and John says, I'm gonna catch it. I'm gonna go. Nicely done, John. This would be a continuation. This trade didn't work. So John waits for everything to agree and looks for the next leg. And then when you look at it on both charts, check it out. John is chomping to teach. I love it. Notice that he annotates everything. Second higher divergence, the same reason on a small chart you might exit a trade, on a large chart is a great sign that it may push up more. Every indicator agrees, and when those small triggers roll, you'll notice that John doesn't just jump in. He waits for everything to agree, it looks like. No, where did he get in? It's hard to tell. Oh, he does. He gets in on the pullback, waits for confirmation, and then goes up. Nicely done, John. Nicely done. Estefania, strong trending market again. Sell the mid-band. Great recognition of trouble. Getting paid. All right, here's the whole one. Thinking about strong triggers. Late entry you were talking about. Exit at the one-to-ones. And Paul, I like it. A market that is railing on both charts is difficult to stop. Can we all agree to that? When there is momentum, when there's room to the next thing that could create a bounce, more often than not, it seems to get to that area. And Paul, all you did was just take advantage of that concept. And I love your management. You're like, you know what? These one-to-ones could stop it. I'm totally cool with $800. I'll GTFO. Take my money. High five myself. This is, Paul, this is the chili dog. Your trade is, well, let me find it. Is this trade. When everything says down and there's room to trouble, it's more likely to go down. I dig it. I don't hate it. But remember, guys, I always go back to rules, right? I always go back to rules because when you can define it, you can repeat it. When you can define your trade, when you can have a checklist for entry, you can do the same thing. You can test the pattern. You can create a management plan. All those things. All right, triggers up, strong side, and look at this, guys. Price breaks away. You can see the gap, and when it pulls back, John says, holy crap, resistance is support, Let's go. I love it. That's a momentum trade. And the foolish trader puts his target on the other side of the VWAP. How did that work out? But guys, this is the look right here. Let the bar get away and then pull back. That's your entry. The little prairie dog, that's the one that doesn't work so much. Ron's going to insist that you send him a nickel. Nice one, John Novak. Victor, I caught it. There it is. No, you didn't. I will learn to annotate this trade, I promise. So excited, don't even know how to annotate. HVA line shows price up, price close above lines on previous bar, jumped the fudge in, wrote it, resulted in 760. All right, Victor. This is where I kick you in the nuts. Sorry. Sorry. But we're going full clacker crunch here. The large chart says down. The large chart says strong side. The large chart says room to trouble below. There is not even a termination to suggest the market will go up. Does that make sense, Victor? Can we agree on that? The smart money is looking for shorts. All right. So now I'm gonna do the small chart. We are below the outer band. The larger down. No momentum up. Not from a term. Did not open above the HVA line. Does not have momentum to jump the fudge in. Does that all make sense, Victor? This is you seeing the white bar and saying, oh shit, I have to go long. Sorry, I have to stop swearing. Oh my goodness, I have to go long. Victor, if you were writing a plan, could you look at this right here and make a trading plan with it? I will rely on nothing more than the immediate strength of the small triggers when everything on the chart I follow says down with room. Now, I'm glad you got paid. And you will. And I hope that you're screwing it up on simulator. That's your right not to. But if you're going to pick a brand new trade, a brand new pattern, guys, live money isn't always the best choice. You would have done that too. That's all right. Guys, you do whatever you want to do. You do whatever you want to do. Smalls down, weak side, room to trouble, close below, perfect entry, out at trouble 5. Oh my gosh, is that 5-3? Pablo. Sword, you got to make your own rules, right? Pablo, virtual high five. That's the one. Pablo and I talked last night. Pablo and I went to the golf simulator last night, and we talked about learning to trust your trade, following your plan, learning your rules. Just freaking amazing, Pablo. I hope you're listening. High five. Robert, don't answer this in the room. Sword Trader, don't answer this in the room. That's a trade you would have done. How has that trade served you, trying to be first? Is that trade producing more winners than losers? Is that producing consistent wins? Is this producing economic freedom through day trading? Or and I'm gonna interject my own life story. Is this trade winning just enough to make you believe it's a good idea, but kicking the ever-loving crap out of you more often than it doesn't? Guys, you got to answer that question. I know in my experience, it's kicking the ever-loving crap out of me more often. All right, so Victor, now it's a termination. Now it's a white bar. Now it's a close above. That's where the market has a better chance of going up. But the biggest challenge here is that you still have small triggers below the large triggers. Oh, man, I'm glad to see you back. I really am. So Victor, let's go into the next part of the pattern. If you're going to put all your eggs in one basket on a white bar, you have a higher chance of success if the small triggers are on the good side of the large triggers. Does that make sense? Gotcha. Cool. You know, when we were kids, John Novak and I would stack 4 bricks in a 2x4. And we would pedal our bikes as hard as we could and jump that thing. And about 80% of the time, the bricks crumbled and we wiped out in a big bloody mess. But the 2 times that it worked kept us in the game to keep doing it. And we forgot about the scars and we forgot about the pain and the tears, because the times that it works feels amazing, and it's hard to forget that. It's like that one golf shot that makes you go buy new clubs. It's like that one golf shot that makes you go, yes, I can do this. And Victor, that's part of learning a new pattern, is making mistakes, right? Where do we learn to hit a baseball? The batting cages, at practice, not in a game. And that's kind of that's one of the things you have to remember, guys. And Victor, you're amazing at trend trades, right? You know trend trades like the back of your hand. You can take trend trades and feel so comfortable. Here, watch. There was your up bar. The smalls are finally above the large triggers. Oh no, I did the wrong one. That's your look. Now the smalls are getting above. Now you have a termination. There's your white bar. There's your open above. If it's going to go, awesome. If it's not, it's a relatively small start. Does that make sense, Victor? There's the white bar with the smalls below not doing anything. There's the white bar with the smalls above. Watch it run. Pretty cool, right? And it's the subtleties. It's the subtleties of execution. It's that little bit of trigger line. It's that waiting for the termination. But when you're brand new, and watch this, if this is really going to be the bottom, who knows how far it's going to go? We'll go break even and just see if it straight lines. Do you see how they're above the large triggers, not below? That's the game changer right there. That's the game changer. Down below, there's a huge fight. Smalls above. That is the rule for the HVA trade. There's my first sign of trouble. I could get out there for 9 grand, right? Who cares? It's simulator. But do you see the difference? That's the difference. And it's subtle. But if this is really going to be the bottom, my first trouble on the large chart isn't from here. Obviously, there's probably going to be a lot of fluctuations on a small chart, and getting paid counter trend at trouble definitely makes sense. But we're talking, so who cares? Come get me break even at simulator. Great entries create manageable trades. Great entries create opportunity. Great entries make sense, and we're out break even. But from 15 to 51 is 36 points. And if you lost this one, and you lost this one, and you lost the previous one, you don't have the stomach to take that one. And now that is your true HVA trade, because very often they come back and they retest the high volume area. And your stop has to go below the white bar that creates the HVA. And it doesn't guarantee a winner, but that's the textbook HVA. First, it's a termination, smalls above the large, pull back to the HVA line, That's the one that Nexgen's been teaching for generations. There's a breakout bar down. Uh-oh. But notice that price opened above the bar. We might have a fighting chance. It's all about subtlety and the little things. John says jump the fudge in. Termination. All the momentum. Nothing in the way. Jump the fudge in. I like that you wrote in, John. You didn't just put the I. And just down it goes with momentum and path from a termination. You wanted to use the one-to-ones. That's okay. That thing was screaming. And there's nothing in the way. So for you guys that aren't John Novak, the first close on the wrong side of these triggers, that's your loss of momentum on your jump the fudge in trade. And this is one of those trades where I will literally chase the reversal bar. Because if I get the failure, thank you, John Novak, close on the wrong side of the triggers, it just becomes a trend trade. Get paid. Get back in. Go rock star down to trouble. Nicely done. How's that for an illustration? If my momentum trade fails and the large chart is perfect, it just typically becomes a trend trade. Ask Pete. Pete knows. John Novak, nice trading. That's your trade. That's it, Pete. 100%. If momentum fails, it turns into a trend trade. I'll be darned. Quick profits and out because look at the gap theory, Pete. Great job. Our HVA trade, look at that. It went all the way up to 38. But it didn't work because everything says down. So Victor, one of the things, if you're going to go counter trend, make sure it's the best entry. If you're going to go counter trend, make sure you're getting paid because, hey, it's counter trend. And if you're on the strong side of down triggers, man, you're lucky. Here, what is again? There's nothing. There's nothing. You're below trouble from the strong side. Your only option is let's go down. This is your down bar. It opened above. That's not your pattern. That was in trouble. That's not your pattern. There's nothing to do. This is the nothing to do pattern. This is the go make a sandwich pattern. This is the go walk your dog pattern. This is the go to 7-Eleven, get a Slurpee and a big bite, hang out, do anything, but hope the market does something it isn't saying it's likely to do. Victor, I was watching it live, brother. I was watching it live. And this bar opened above that HVA, didn't it? This bar opened, started, began to print above that HVA line. That's not your pattern. This is a down bar. That's the highest concentration of sellers. It opened higher than that. That's not your look. But even if it did open below, there's nowhere to go, right? This bar is one piece of a big puzzle. And if you focus on this one bar, you're going to get slaughtered more often than you don't. There has to be rules for it. There has to be a termination in play, right? There's got to be the triggers on the right side. There's got to be a breakout bar with an open above. Well, I just got slipped. That's your pattern. And your stop goes a little bit below that HVA. And because it's counter trend, your target's up there. But dude, they've already tried to go up 100 times. They're struggling. You should. Watch that video I gave you. Watch that video. And don't fight strong triggers, right, John? But we're talking about this pattern. We're talking about termination, white bar, bar opens above. Victor's recognizing this pattern right now. So what we're doing is we're trying to really point out when it has a better chance of success. And we're also pointing out that it should be a one and done. And the one that actually fit the rules won. and you just can't fight it. Yeah, sell when it's down is so much easier. So if you're going to go counter trend, guys, you are in low probability land 100%. If you're going counter trend, you're fighting everything that the big crowd wants. Orlando, I love it. We got some pictures. Let's see what you did, man. Good momentum. So, all right, so Orlando, we're going to talk about clear path down to mid-band. I like this look, though. Termination, a lot of strength. Pull back to the area inside of triggers. You are 2 out of 3, Orlando. Do you see this fib, 58.98 with the triggers above? 58.98? Technically, this is a termination condition because all of the triggers are above support. Does that make sense? And the only reason I mention this is because I want you to say, okay, it's not perfect. Does that make sense? I say that a lot. Does that make sense? Cool. But look what you did. First, you had a termination. You let it reverse the market. It created all the momentum. And you get the perfect pullback right to the area, right at the triggers. And this is really like a momentum coming. It's a beautiful trade. And because it is such a beautiful trade, the market ramps down. And now you're at your mid-band, right? Now you're at your potential trouble spot. If I am in at 98, if my bid band's at 81, that's $180, right? That's $170 worth of profit. You've got it locked in. You're not going to lose money on this trade. And if all that momentum wants to push it, heck yeah, you're going to push it. Orlando, that reversal bar stop makes all the sense in the world because if you get an up bar here, it's likely to create a trend trade. And let's go see. Let me open up my crude oil real quick. I want to see what happened with that one. Nice job, Orlando. Welcome to Nexgen. There's your trade. There's the reversal bar that took the momentum. And look what's happening. There's that second higher divergence. Your exit was perfect. You didn't give it all back. And if you took the next trend trade, that second higher divergence was an exit. And now they're doing the dance. Absolutely beautiful. Absolutely beautiful. John Novak is proud of you right now. I can feel it in his posting. All the momentum. Hold on. All right. So let's look at it. Everything down. No space. Market didn't come get them on the wrong side of triggers. It just finished to the fib. So John Novak, your chili dog was somewhere around right here. Get below those 1-to-1s. JTFI, baby. Especially from that strong top with all that look. And if it reverses, get your trend trade. And if it doesn't, it's Profitsville, population U. Guys, that's the beauty of this trade. And John showed the exact same thing earlier. And Orlando, you showed it in your picture as well. If that trade fails, it typically pulls back up and creates the trend trade. Too fast? Was it too fast or were you too slow? Oh, sibling rivalry right in front of everybody. I kid. Guys, everything that I teach every day comes from John Novak. Everything that I've learned and that I share with you has come under the mentorship of John Novak. So I'll take like a loving brother moment and let you know that without him, I wouldn't be this good. But John's got me by 20 years, 25 years, and I've got you by 6. So remember, if you can't do what the people in the room are doing yet, remember that it's yet. Remember that you'll get to a point where you say, when a termination reverses the market, that's an advantage. When there's momentum, that's an advantage. When there's an area inside of triggers, that's an advantage. I just have to be on my guard in case it doesn't work right there at trouble. That's your chart read. It's directly into a termination condition. 100%. If I choose to take this trade, one, I have to expect it to lose more than it wins. But if I choose to take it, I better manage it assertively, right? I better put my stop where the market shouldn't go. I better be willing to get paid quickly. Come on, momentum for the win. I better get to break even fast. And there's nothing about this look that tells me the market is going to continue down. Does that make sense? Trading into a termination condition will result in a loss more often than it does not. We need a hypnosis class. Listen to this for 24 hours. That's you. Sword trader, that's you. There we go. There's quick profits. I'm going to get to break even because I know it's not a clear path. I've got money in the bank. But you know what? If it breaks, if it does break, I don't have anything in the way until that fib down there. So how am I going to manage it? Well, it's going to get me break even and I won't get the chance. Trading into a termination condition. Guys, you don't have to, but if you do, be assertive. So sword trader, are you ready for your hypnotist class? I'm glad you said that. I want you to see something. Whether it is NinjaTrader or TradingView, guys, there are things that you have to recognize. You've got to recognize direction. That's a very big part of what we do, trading the right direction. Even John Novak said that, right? So why not take 20 pictures of triggers up and say the direction is up, I'll only look for trend trades long. Or take 20 pictures of triggers down. The triggers are down, I will only look for trend trade short. And now I put momentum here, and Sword Trader, you might have even given me this. So we'll do this, right? Momentum, best. I'm going to go back on TradingView, and I'm going to say, I'm going to take this picture right here, and I'm going to say, when I'm on the strong side, this is my best look and the market is more likely to go. And I'm going to do that 25 times so I can believe that from the strong side I have an advantage. And then I'm going to take it a step further and I'm going to say when I'm in transition, I have to be more aware. When I'm on the weak side, this is where reversals come from. And guys, you can go through, and that's your hypnosis. That's your repetition. That's your rinse and repeat. Is that you're going to take one look. Boom. Price reaches an area, none of the triggers break. You're going to say, I know that it's not a clear path. The market's more likely to bounce up than down. And guys, look what the market's doing. Termination to termination to termination to termination to termination to termination. Are we so egotistical that we believe it will break for us? I am. You're damn right I am, guys. And you probably are too in some capacity. VWAP zones all the trouble. Hold on. If I was patient, this would be a better entry, or the HVA. But it wasn't. John got in short on the way up. He could have got a better fill on the way down. Thank you for sharing that, John Novak. The price where he enters here at 12, guys, 13.5, is the exact same price, even a little worse, than the close below the triggers, from the zone, from the VWAP, smalls below the large, all the good stuff, right? Pretty awesome. Oh, there's John's look again. From a weak top, he says, wait a minute, not my best look for a long, but when everything rolls up, there's my continuation entry. When the small triggers roll up, when the large trigger still supports longs, that is a rock star continuation entry. And from his beautiful entry, the large chart just says nothing but up and out at trouble. If it breaks, outstanding. He's got one contract. If it doesn't break, who cares? He's been paid. He can do no wrong. But guys, look at this. When he said this isn't my trade, he said I'm not going to jump in. I'm not going to jump in. I'm not even going to get in with a reversal bar. I'm going to force my immediate momentum indicator to go up. I'm going to break the one-to-ones. I'm going to pull back to them as support right at that indicator. That is a momentum style look from a termination. It's pretty awesome. Guys, that is some in the moment, really quick chart reading. Was moving, stop below pivot. Nice. And now we're into the same termination that's already held 3 times. Should we wait for at least the potential to break? I would. My plan says don't do it, Mark. Why would you do it? Please don't do it. You've got children to feed. All right. Termination has held 3 times already. 3 15-minute bars. Now we're getting to the transition weak side, right? If you're only trading the direction of the triggers, you don't have a long trade because these are down. And as long as they're down, the market's more likely to go down. Some of you will say, but wait a minute, I'm getting to the weak side. I have a termination. I've gotten above this area of resistance. Maybe it's behaving as support. I've got odds favorable momentum. Maybe I'll take a shot at the momentum trade to go up. It's not in my plan, but some of you may put it in yours. Triggers up above. John, what did you do here? Did you go short? John went short. Triggers are up. Nowhere to go. All the momentum up. Smalls above the large. I call bullshit. It has to go down. Oh, you've been short since the top. Oh, that was your management. Can I talk about it? You called the top beautifully. Take the perfect trade, right? You've got all the trouble right here. With these triggers still up, what a great spot to take 8 of them off. Hold 2 for a runner. Get your pivot, comes back down to the next trouble area. These triggers are still up. Get paid. Get paid. For the love of fuzzy, get paid. You say wrong? I'm wrong in my analysis, or you were wrong hoping for a whole run against the triggers? And I think it's cool, John, because, and thank you, because what you're doing is you're showing that we're all human. When we did that one from the bottom over here, John said, dude, you're on the wrong side of the triggers, and called it 5 minutes earlier. And then once you get into the trade, you say, oh shit, I sure hope it goes forever. The hopium pipe was full. The goal of trading, in my experience, for as long as I've been doing this, the goal of trading has been to take more out of the market than you put in, to let your winners be bigger than your losers, to be willing to exit, to act in your own best interest. And guys, I'm going to do it again. I'm going to bring up Johnny Calculator here. Are you ready? If I take, if I take 2 $200 trades a day, that's $400 a day. $200, that's not a lot. And I do that for every trading day of the year. I average out 6 figures. Now, if you're on TradingView and you have Nexgen Pro Trader funding, you can copy 5 accounts. That same $400 turns into $500,000. Based on two trades, $200 each. And I don't think traders think that through. Why would you hold for a home run when base hits pay bills, right? John, you've got all the momentum. You've got 3 triggers through. You have the perfectly defined entry, and you have room to manage. John says the people who have gotten paid from funding all have one thing in common. I know what it is, but tell the room, John. Sent $4K to someone yesterday. $350 a day. Guys, this is one of the greatest movies regarding getting paid. Have you guys seen Moneyball? Brad Pitt, Jonah Hill, Chris Pratt, Robin Wright, Philip Seymour Hoffman, Nick Perazio. Guys, the whole idea behind Moneyball, the whole thing, this is a true story about the Oakland A's in the 80s. And this handsome fellow is a general manager, and this portly fellow is a mathematician. And he says, hey, you don't need home run hitters, you need people that get on base, because base hits win ball games. And they took one of the lowest budgets in the Major League Baseball, and they created a team that got one series away from the World Series, guys, on a budget that was like 1/100th of the Yankees or the Red Sox. And then the Red Sox adopted the methodology of believing that base hits pay bills and won a pennant like a couple years in a row, a few years later. And the idea that base hits pay bills. So does sign stealing. Yeah. When you have momentum, when the path is outstanding, when you get a pullback to an area inside of triggers, you're stealing signs from the large crowd. Don't you talk about my Astros, John. Good stuff. All right, guys, I'll leave you here. We'll see if it creates a bounce. I need like 2 minutes to talk to the man about the thing. When I come back, any questions you have, let me know, guys. Any pictures, let me know. We'll look at John Novak's second try and see if he followed rules. Back in a second, guys. Today strong. This is my last one from Washington. So let's see what John did. All right. Triggers are up. Caught in a zone, but it is a termination. Victor, there's your pattern. Do you guys see it? Here's the termination coming over from the large chart. There is the down bar. There is the high volume area. There is the open below. Dollars to donuts. John Novak smashed the sell button right there. Because he did, down it goes, over and over. And a lot of you were wondering, well, John Novak, why on earth would you leave all of that risk on the trade directly into one-to-ones with the triggers up? Well, that just seems foolish, John. And guys, I don't appreciate you calling my brother foolish, but you know what? That is. Protect your position. Fortunately, it doesn't blink and goes right to his target. Nicely done. Nicely done, John. A willingness to get paid. A willingness to get paid. I'm so proud of you right now. That's hard to do, isn't it? It's hard to accept profits when you think there might be more. All right, Victor. Trend trade, triggers down, price in transition, room to the next trouble. From 21, yeah, you had a couple ticks there. I like it. Small chart, pulls right up. There's your close below. You get in on the close below. There's that darn zone. And you get paid at 07. Nicely done, Victor. Quick profits. You made a choice on the zone, and your choice paid off. Nicely done. Take and manage. That's my brother's battle cry. All right, Paul, there's your jump the fudge in trade. Right? There's the new one. Oh, and I just saw it. Hey, Gramps, welcome to the room. Uh-oh, he's out now. Man, I saw a test. Guys, when you see new kids, say hi. There we go. We were all new once. So John, not going to annotate it. Here we go. I'm going to annotate it for John. This termination condition is changing everything to the downside. I can see it on my small chart. So even though they haven't rolled, it's okay to look for shorts in my plan. Now it gets even better, guys. There's his entry. When 1, 2 ones that were previously support break, they behave as resistance. Have you guys heard that one yet? When an area breaks, when an area of support breaks, and price comes back to it, very often it behaves as a resistance. With odds favorable momentum, this is a textbook momentum look, momentum trade. From the area that broke, not from the area that did not. So guys, Paul, so do you see how he waited for the 1-to-ones that broke? Because price breaks, they become resistance. It's the perfect trade. And with all that momentum, he's saying, you know what? This one's less likely. And he even waited for the down bar because the large chart hadn't completely rolled yet. So he waited for a little confirmation. Guys, this is awesome. But it goes back to that concept that we were talking about. If the market is skirting right at a zone, the zone's not broken. But if those bars get below it and the market comes back to it, support becomes resistance. Resistance becomes support. And it's that little nuance that changes the whole dynamic of this trade. Because if he tried to jump in with his head peeking, right, that's not the trade. It even comes back and hits the 1-to-ones again before it continues down. I love everything about that trade. Holy, strong trending market. There was your good one, right? There was the easy one. There was the perfect one. And then there was that mid-band. Keep selling it until it doesn't work. Good stuff. Guys, what do you want to talk about? We have another 10 minutes. The longer you keep me here, I don't have to pack. Or I don't have to load the car, at least. I'm all packed. I have a little bit of OCD. For you guys that aren't on TradingView, that are on NinjaTrader, but you really dig those minute bars, there are workspaces. John Novak created one, and then I recreated the one that we teach on in the room. I'm a fan of minute bars. They slow me down. If I have to wait for a close on the correct side of the triggers, it works with my brain, right? Oh, Andy, that was not a mistake, getting to Texas in the winter. So my youngest son flies in tonight. We will leave tomorrow. We'll be on the other side of the mountains by tomorrow evening. So we're going to drive by Andy V and wave to him in Montana. I'll be in Texas Saturday night. I'll be home Sunday afternoon. And then we head to Georgia That's our next stop. So I get to be in an Eastern time zone, guys. I've never taught this class unless I was visiting John Novak from an Eastern time zone. So I'm going to sleep. I'm going to stay up past 8 o'clock. It's going to be wild. Victor, there's your pattern, but there's no rules, right? Less likely to work. What are we doing right now? Triggers down. Weak side of the triggers. I'll call my shot. That's where it's got to go. Once the small triggers roll, that's where it's got to go. If I'm going to get a trend trade, I know exactly where that trend trade is most likely to be created. You may get to a point in your life where you try to take the long to the short because you believe in the trend trade pattern so much. Not a high probability trade. No guarantees to get there. Does that make sense, everybody? Because this is down, I'm looking for shorts. Because it's transitioned to weak, I know how to manage it. Because the small triggers rolled, I have to get to an area with a close on the correct side of the triggers to take the short. And if it doesn't give me my trade, I just won't take the trade. It's just not mine. It's not my money. That's hard, guys. It's hard to sit still. I don't know about you guys. I don't sit still well. Do you know what I had to do? I'm going to show you guys. This is my patience piece. I go play poker. I love Scrabble. And I'll play this over on this monitor, and I'll just wait, and I'll look over and I go, oh, not my rules. And I'll go right back to Scrabble. And I'll say, oh, not my rules. I don't have a trade. And Victor, do you see how the pattern fails pretty quick because the rules aren't met? That's what I want you to get. As you guys start looking for these white bars, and I know there's a lot of you that are paying attention to it, if the rules aren't met, it's more likely to fail. If you're fighting the large chart small triggers, it's more likely to fail. If you're trading directly into areas, it's more likely to fail, guys. It doesn't mean that it will, but it means that your edge is gone, that your advantage isn't present. And when you talk to John Novak tomorrow, and he's talking about all of these entries, and he's talking about these exits and all that, pay attention. He's going to give you guys some amazing stuff. But I'm going to say it, and I'm having this embroidered into a doily right now as we speak. Great entries create manageable trades, guys. When you're in at the right spot, it's an easier trade. When you're in at the right spot, there's typically less risk. When you're in at the right spot, guys, that's when things happen. And look at this. So we called our shots, right? Just because it didn't straight line doesn't mean that there isn't going to be a trade, just not yet. If it gets there, we'll pull the trigger. We'll have some fun. If it gets there, if the rules are met for entry, we'll pull the trigger. I guess I do have one-to-ones here, don't I? Is that right? I do have an area. It did pull back to it, but I've got 30 seconds before I know whether or not I get a close on the correct side of the triggers. I didn't see these. 89.75. I've got pink one-to-ones. I've got 21 seconds before a potential close on the other side of the triggers. Does it guarantee a win? No. If I get a close, my stop goes above the pivot high, which means that I've got about $600 per contract on that particular close. These bars are big. Has the market been really volatile lately on the Renko charts? They're probably going up. There we go. I personally, I'm not putting $600 a contract on a trade directly into one-to-one. So even though that was the area, there was no room. Do you guys see it? No room because of the one-to-ones. One, two, three, four, 5 minutes ago we drew this box. There's the mid band. Now it's got some work to do to give us an entry. The only thing I'll ever be in control of is whether or not my rules are met. So I've got direction, it's down. I'm on the weak side of the triggers. I've got room to trouble. What's the only thing missing from the plan to create a trend trade? Victor, there's your pattern from the area. A close below. Victor, that was your pattern. It's not going to give us an entry, guys. But did you see the down bar with the HVA, with the open below? And do you see what it's doing? They knew they were going to the mid-band, and they knew that's where they were going to start back down, and that's why you've got an $8 million bar. It just didn't give the entry. It's not my money. Does that make sense, everybody? We called our shot, but the recipe wasn't complete. Now, Victor, one of the things that I've been looking at, and one of the things that I'm studying, is target previous down bar. Hold on. Oh, is that previous bar? Yeah, it's a down bar. I think, maybe. Sometimes it's hard to tell. It's both. That's the highest volume. It opened below. There's your breakout bar down, and it opened above. Sometimes, okay, then it's not. But do you see the HVA, Jen? The open below it says probably no more up. Yeah. So I've been watching this. I don't trust it for entry. No, I don't have a plan that uses it for entry, but I'm not writing off the idea that one day I might. But there's the market going down. Just didn't give it. That's okay. I'm not trading live. We're just doing lessons. Guys, good day today. Thank you, John Novak, for hanging out in here today and posting in the room some of that great stuff. Guys, I'm going to tell you right now, it is nothing short of amazing when the CEO of the company shows up and really wants to be a part of the education process. The guy who wrote the indicators will be here tomorrow teaching the indicators. Remember, if you don't have that basic foundation, you may have a couple challenges with what he teaches. So make sure that you study Momentum Path this evening. And I'm going to call it. Let me get you